What's up, everybody? So today, or this week, I should say, from what I've seen, things look pretty in line with what we've been talking about. So I think I'm just going to continue to hold the opinions that we've had since Sunday, for the last couple months, right? This huge run higher, I've been saying we don't pick bottoms, we don't pick tops, and it just seems as though this was pretty much just a fake out, like a head fake. The turmoil between the Fed chair and Trump is, for whatever reason, causing even more uncertainty. There's a lot of things that are just taking place that are heavy to the market. So, again, the sentiment overall is still bearish. Nothing should be screaming at you to buy. We saw this, and I'm sure a lot of people jumped in and tried to buy. But there's nothing structurally that has really changed anything. Right, I've been talking about this high for the last couple days, at this point, last couple weeks, as a pretty much the line in the sand. So this high, if it stays intact, it's just going to continue to send price lower. That opinion has definitely came to fruition, because we also see how from Sunday I also called out the quarterly fair value gap to be attacked. If we zoom out, so I can show you what that looks like. So we see it here, right? So with that being said, we're in a rush to get there. As you guys have seen, we started the week and just dumped for the DXY. So the fact that they were in a hurry has me a bit suspicious, given the fact they've started so quickly. It's got me suspicious in thinking that, we may see an even more protracted retracement. It may come up into this level, right? If we go to the higher time frame. Something I do see, though, as I always talk about, is this wick here. All right, let me move this actually. So Friday was pretty much done, right? There was nothing that happened on Friday because of the holiday, the Good Friday holiday. So this candle is going to act as Thursday's high, or Friday's high, I'm sorry. So in a very similar fashion, right? Friday's high and Friday's low going into Monday's trading is generally a possible target. As you could see, price opened up and didn't even give it a chance to be a target. It just kind of blew past it. Again, we have this down wick here. Okay, again, price has been in the downtrend, but we've hit this higher time frame PD array, higher time frame opposing PD array. This isn't just any little time frame PD array. This is the quarterly perspective time frame. So this may set the stage for a possible protracted move a little bit deeper. Maybe contest this a little bit. We talked about this monthly bearish breaker here and how it would hold price, and pretty much every observation that we have talked about, from narrative to key levels in the marketplace, pretty much every single one of them have been tapped into, for those of you that have been paying attention and watching, right? So I hope it's been eye-opening, and those that watch this replay, I do encourage you to go review some of the other ones that we've done, just leading up to where we're at, because the whole entire process is what's important. You know what I mean? If you can get a grasp of how I'm telling you guys to do things, or how I'm telling you to consider to do things, because this ain't financial advice and you do what you want to do. But the more you get in tune with this stuff, the better. Because, I try to keep it as simple as possible, and I showcase the accuracy, and it's incredible. It really is. It blows my mind, So, and I have a lot of students now. It just seems like new students are popping out left and right that are getting clarity in the marketplace. That's the whole purpose, is to give you guys clarity. And at least from what I've been seeing, the performance I've been seeing from a lot of the people that come to me, students that are looking for guidance, it's been amazing. It seems like I'm doing just that. And I hope, for those of you that haven't got there yet, that are supporting the channel and supporting the content, I hope your time with me can help you move towards that a little bit quicker. But yeah, so again, we've hit this quarterly fair value gap, and this quarterly fair value gap has pushed price higher. Okay, remember, I've been talking about this for the last couple of weeks too. Opposing PD arrays, if we're in a downtrend, are going to act as moments in time where price looks to retrace. Okay, doesn't mean that PD array is going to turn it around entirely. Sometimes it does. Like say we go into a new quarter and price has been bearish, and then going into that new quarter, it hits a higher time frame PD array and then breaks market structure to the buy side. Right, that is something that can trigger in a quarterly shift or a change in overall sentiment from an opposing PD array. But just using that as like an anchor point to anticipate the change in state of delivery. But as of right now, right, we did see a very strong whiplash to the buy side, which set up this market maker sell model. We drove this market maker sell model all the way down to this low. Okay, all throughout here we talked about this step by step, day by day, week by week, and I had invalidation levels pointed out, which is very important. So again, that's why I encourage you guys to, if you haven't watched from the last 2 months, I should say, you should go review these things, because there's priceless information that's given. Yes, the videos are kind of long, but they're live calls. I'm answering questions and doing a bunch of stuff. But nonetheless, the tactics from managing trades, managing positions, to identifying positions, to identifying narrative and bias, how to navigate that, what does what, right? What should do something versus another, right? How correlated assets affect each other, how all the assets affect each other, fundamental analysis, right? Like there's just been so much that is jam-packed into these videos. So again, I definitely encourage you guys to review them if you haven't from the last 2 months, because it's been quite incredible. Okay, spectacular, and using no one else's opinion but our own, and then of course some of that coincides with ICT himself, which is amazing, because that's graduation, and the same with you guys that are here too. If you can see what ICT says, see what I say, and you can get in line with that in some capacity, I mean, you're on the right track. You know what I mean? You gotta be honest though. You can't just say, oh, I said buys and sells, or buys or sells with the little arrows up, arrows down, and then all of a sudden it goes right, and then you falsely think you did something correctly. You don't want to have that type of experience either. But so yeah, just be honest, review some of the stuff we've talked about, and keep showing up, because I mean, other than me shoving how much money I make per day in students' faces, everything else is covered, because I'm not going to distract you like that. If you want to be sold the dream like that, and you're so obsessed with how much money is being made versus how accurate I am in the charts, and you putting two and two together, if you can't do that and you're demanding me to show you trades where the money's there, like $5,000, $10,000, $15,000, you're in the wrong place, because I'm not making signal junkies and I'm not creating codependence. I just won't do it. And if that turns people off, so be it. I show the monetary value sometimes, but again, it's a huge distraction. And I've learned that through the years, traders that are really new if you show them that type of stuff and you're the mentor, it's going to discourage them if they're making $20, $30 a trade, or can't even do that. You know, it's just like, oh, well, why can they do it and I can't? See, it more heavily focuses on what the process is to get you there versus being sold a dream that you are not probably going to be capable of doing right now. Okay, for those of you that are really new, you know, there's stages to development, and you want to be obsessed over process, and that's why we focus on process. 80, you know, it's not, hey, I made 20 grand today, like, come and look at my video. You know, it's not like that, but you know, those that have stuck around, that sit through these live calls, ask questions, that join the free Discord or join the private community, I mean, you guys, you do amazing. And you know, I think we're doing something very good here, so we're going to keep doing it the way we're doing it. But yeah, don't be distracted by nonsense on social media. Okay, focus on process. You know, like I said, review the last 2 months of price delivery and conversations we've had, and I promise you, you'll pull a lot of things out of it. And then just keep showing up and you'll keep progressing. So yeah, we are hitting this fair value gap. Again, it hit this opposing PD array off the downside. And then you see what that's created. You know, large range, got there quickly. It was in a hurry to get to this quarterly fair value gap. So as a result of that, look what happened. It set a low and now it retraced. It turned around. It, you know, ended up trying to reach up into this level. So we have this wick here on this daily chart. So it's pretty interesting how it's lined up perfectly with the open price of this this week. Kind of interesting, right? But yeah, so we're gonna just continue to try to, I guess, watch and see what's gonna happen in here. Is price gonna displace lower, and does that end up translating to movement higher in the indices? I don't think that's going to be the case. I'm more favoring the fact that this is probably going to end up getting outside of this, potentially. And if that does take place, then obviously it's going to put sell-side interest into the indices. Okay, so we're watching, you know, this gap here with this fair value gap. That whole range is the range we want to observe. Because when there's a volume imbalance, you want to use that entire range. All right, so again, we want to continue to watch what this is going to do here. You know, I think it is ready for some type of retracement. Let's just kind of move out a little bit. We do have this really, really small gap in here. Let me see, is that on the monthly too? So yeah, that kind of goes hand in hand with this lower portion of the monthly fair value gap. So yeah, that's what we're going to continue to monitor. Okay, and if this continues to drop, then you know, ideally we'd like to see the indices rally. But there's been so much stuff happening in the economy, like the adjustments to economic policy, that all U.S. assets have been getting hammered. Right, and a lot of it's, from what I'm hearing, is heavily manipulated because, again, all the stuff that's happening in our economy is not bad for our economy. Okay, like it's actually good. You know, brings more jobs, bringing more stimulation to the U.S. dollar, forcing people to use the U.S. dollar to keep it strong. So at some point, you know, this is going to happen on the DXY, and over time, maybe like a year from now, maybe less. That'll translate, the positive effects will translate to the stock market. And then, of course, if we can identify that moment in time in the chart, things will be pretty nice. Right? So, yeah. So, again, we got this wick here, so I'm going to keep watching that midpoint. We were in a hurry to get down to this quarterly fair value gap. Price has been extremely large range, has had extremely large ranges going down into that, and it quickly got there this week, and it hit it, and now we're coming off of that low. So I want to see if we break through this fair value gap in here, then that means my eyes and attention go back up to the gap up here. If not, right, then it may just continue to stay below this, and then if it does and displaces, then we have the rest of this quarterly fair value gap to watch. Okay, so that's kind of my opinion on DXY. We got the bonds and yields kind of sitting in a range. They have delivered from the points of interest I've been talking about monitoring. So again, just another side note, we've looked at multiple assets, and multiple assets have done the same things in terms of delivering what we want to see it do. There's been some obviously like this that's kind of been sporadic, but nonetheless, whether it was going higher or breaking lower and continuing to go lower, we've been in line with this market as well. You can also trade this market as well if you don't know. So I think $30 per handle or per point, whatever you want to call it, versus Nasdaq that's 25, and the S&P that is $50 a point or handle or whatever you want to call it. Right. So we also, for the currencies, we're talking about this buy side liquidity pool up here being an equal high, monthly equal high, and a monthly high. How that was probably going to be attacked very quickly and have little to no retracement, because this is a market maker buy model, and if it's going to remain a market maker buy model, this should end up being the second stage distribution delivery, and just really ramp higher and push quickly to get above the high. And that, my friends, has taken place exactly as we talked about on Sunday. Okay, so yeah, we'll see what happens. It still has a little room to go up there, so I'd prefer to see it blow that out, and then if a retracement takes place at that point, then so be it. But bias or narrative overall for this market has been bullish, and we've rode it both sides, right? Since it was selling, we were on top of it, and then more recently it's been buying, and we painted the narrative around that and gave invalidation levels. Again, this is one of those things you want to go back and review some of the last 2 months of price delivery and live calls, maybe even 3 months back into January, because we've been in the process of invalidation and validation, and just why price should do one thing over another, like what gets us to those decisions. The whole process is on full display weekly. So if you're diligent and consistent showing up to these calls, that is something that, at least from what I've seen through other students, that's what you'll achieve, is learning those elements. And with those elements, you give yourself the opportunity to have consistency. And then, after that, things get real exciting. So yeah. So this is a weekly chart. Again, I don't think we're going to retrace too aggressively, but it could happen, especially if the DXY wants to get bullish from this quarterly fair value gap. Good morning, Mark. Good morning, brother. But yeah, so those are some of my thoughts. I do still see it's definitely opened up, left this new week opening gap in here. So let me actually adjust that. So yeah, we got this regular trading hours gap too. I pointed this out yesterday. I kind of left some of that open, right? If I can get it to show up, there it is. All right, so this regular trading hours gap is still open, still available. I wouldn't mind seeing them run up into that. Obviously, I'd prefer to see it decline, start aggressively rampaging lower. If it does do that, right, going into this new session, the New York session, if we can't really have evidence that it's going to want to get up here in any meaningful capacity, and DXY continues to rampage, then obviously we have overnight liquidity from here, and this consolidation may turn this delivery, if this high stays intact, it may turn this into a market maker sell model. We do have these I mean, I guess they're relative equal highs from this 1 minute, but we'll see how that wants to be treated. And of course, there's no news today. Only day is at 7 o'clock AM Pacific Standard Time. So that's in an hour and 15 minutes-ish. So we may not see too much fireworks until that moment in time comes into play. Right, so again, that's something we're going to continue to watch. And if we go to this 8-hour chart, just kind of get a feel for what is around us. Okay, we've rejected off this 2-day bearish order block. Again, all these annotations we've talked about ad nauseum for the last couple weeks. And then, of course, going into this week, previous Friday's low was taken last week, like previous like 2 weeks ago. And then this Thursday, ahead of Easter on Good Friday, that was also purged out with the open on Sunday. And now prices retraced, right? It came, swept these out. We were talking about this, showed some of the ideas in the free Discord, but I talked about it in real time with my private community, and price purged it out. It definitely went a lot further than I thought it would do in 1 day after a holiday. It's not typical that holidays present us with nice price delivery. The day before, day of, and day after a holiday is classified as high probability. As low probability. Sorry about that. Because there's holiday volume coming in, and a lot of times it'll promote consolidation. It will promote more tricky, cracked correlation type of vibes. And again, as you guys know that have been here for a while, cracks in correlation create high resistance and a lot of times low probability consolidation conditions. Okay, until price breaks out, right? So definitely keep that in your journal as a rule for knowing when to trade, when not to trade, or when to adjust your risk versus, when not to, when to keep it normal. Obviously based on the risk protocols that you use. But yeah, so we have this fair value gap with a wick here. So that's kind of interesting. We want to see how price delivers in here. Now I can say if we do displace higher from here and it gets above this high, then obviously that puts the potential for these highs getting violated and price actually running higher. It puts that a little bit more in the crosshairs. Makes it seem a little more reasonable. At this current moment, that's not reasonable because we have this down wick, we have this fair value gap, we also have this down wick, we have this bearish order block, and we have this swing high. We're also below, for now, the new week opening gap. Okay, so again, we want to see what happens here. If we displace away from this and we can get down below this fair value gap yet again, then that'll be something that we could consider trying to position ourselves within to attack sell side further. Okay, if we look at the lows here, there's no SMT, not at these lows, not at these lows, and also not at these lows, right? There's not even an SMT here on a more precise basis. So again, it's retracing into this fair value gap. For this asset, the Dow, it has a large wick, got the midpoint there. So we got to see if price is going to want to dig deeper into that, or is it going to use this area as a balanced price range and then continue to want to push lower, and leave some of it open. Doesn't seem like the Nasdaq's really interested in leaving this open. It still may, but as long as we stay below this fair value gap, below the new week opening gap, and below this wick here, I'm going to continue to want to seek sell side delivery. It's Tuesday, so a lot of times the higher low is formed. The fact that this was in such a hurry to get down to this level and now it's retraced, again, we want to watch these levels and see if they hold in price, because if they hold, that supports our downside narrative we're going to hold on to. But if they start to be violated, okay, that's 1 PD array, 2 PD arrays, 3 PD arrays, 4 PD arrays, 5 PD arrays that get violated if this high is broken. And if we get above this new week opening gap, that's already 3 PD arrays that we don't want to see violated if we're going to trust the fact that the narrative is, at least on a near-term basis, is going to remain bearish. Okay? If they are violated, it's going to turn that interest off, and then we'll look to start to frame out potential buy side. Okay? But yeah, it's obviously, if you look at price, we're in a condition, aside from the announcements and things that are in motion in the U.S. economy, we are in a range, right? We're in a range-bound environment. If we go from this low to this high, equilibrium is right where we're hanging out at. Those of you that spend a lot of time with me here and have heard me talk about this, when we're inside of a specific range and we measure it out and we see that price is hanging around equilibrium, whether on the lower time frame or definitely on the higher time frame, that is an idea that promotes consolidation taking place. Now, it depends on where, if it breaks out to the downside, respecting these levels, that's amazing. But again, if it breaks out above and starts breaking multiple PD arrays to the buy side here, and then say DXY responds aggressively further to the downside, that may turn the price delivery to the buy side for the indices, right? So again, we want to keep these things in mind. We want to watch these levels that I mentioned, and yeah, we'll see what price wants to do as we get closer to macros, as we have. This is the first macro here, and then of course go into the open. We'll get a good feel for what's taking place. But that's kind of like the lay of the land, I guess you could say, kind of like what's in front of us right now, and what I'm watching to make a decision on one way or another. The narrative is bearish. That does not change. Bias, though, at least since last PM session, has been pushing higher to retrace. I want to see if there's an interest to want to come and fill in some more of this, and then maybe we get a displacement from there, keeping in mind the respect of that large wick we mentioned. And then, of course, if that can take place, then that will be something useful. All right, so yeah. Let me actually refresh this real quick. Missing a lot of my annotations. Like, dude. So you guys have any questions as we wait for the open to take place? Good morning, Fritz. Appreciate you guys hopping on. Yeah, you guys have any questions? Let me know in the chat before the open takes place, because once that happens, we're going to be looking for opportunities. All right, well, if you guys don't got any questions, we will wait and see. And again, we have the bonds and yields kind of stuck, at least for now. Overall, though, the sentiment is delivering for the bonds still to the downside. We want to watch the delivery within these wicks. Is it going to melt down through them and show no support? They've kind of been stalling, right? Like wick. So all this is liquidity. It prices to want to displace lower. It's again the same process I just mentioned for validation and validation for the other assets. It's going to be the same for this as well. Okay, we got a bearish breaker that's been delivering price, so that's good. This wick here was respected. This gap here was respected. Prices displaced lower. We're down below. And So yeah, we have this new week opening gap. We have this weekly inversion fair value gap. Swing high here, and then the breaker. So again, the only way that I turn off my interest to go lower here in this asset would be if those get violated, right? Because we need a seriously clear delivery going against certain PD arrays in price, certain pieces of price action, in order for us to move away from one higher time frame narrative to the next. We can't just see a retracement in a downtrend and think, oh, it's bottoming out. Like, we can't think that, because it's a recipe for disaster. You know, price doesn't make decisions quickly like that unless you're, of course, on the lower time frame. But then again, even on the lower time frame, if you don't support it with the higher time frame, a lot of times you're going to be having a very unreliable way of tracking price. You know, and if you don't know which levels turn price off for a particular direction, what changes the overall delivery, then obviously, you know, you can kind of imagine the problems that arise as a result of that. You know, I want to remind you guys, if those of you that support the channel, definitely don't forget to subscribe, like the video. And if you have friends that can either add to the conversation or can benefit from what it is that we do here, definitely spread the word, let them know, and have them come and join the family. I greatly appreciate you guys that go out of your way to do that. So yeah, so thank you in advance. But yeah, so let's continue to look at this. Again, we have buy side here. Let me turn on some of the annotations. So similar to the bonds, the yields do pretty much the opposite. Okay, so there was a bearish breaker for the bonds, and then the yields have a bullish breaker. Okay, and you can see the behavior there being respected. You see the wick here being respected. You see, again, the breaker. You see the inversion for value gap. You see this run on stops here. Big jolt higher as a result. PD array down here, weekly fair value gap that set up the run higher. So again, in order for this to change my interest from, you know, bullish to bearish, I need these levels to be violated. You know, if we can get down below this inversion fair value gap on the weekly, that's definitely a pretty decent, strong sign that we're going to drop lower. So Fritz said market maker buy model to original consolidation at consequent encroachment London session, which is just around OT. Which asset are you referring to, Fritz? An ES. Let's go look. Yeah, we could very well see that scenario, possibly. But again, my narrative is bearish. Now, if this does end up running higher and breaking the levels I mentioned earlier for invalidation, then yeah, we can probably adjust our thinking, and we don't have to worry about missing anything, because if we can nail down, if right, hypothetically, if this does look to want to attack buy side and create this as a market maker buy model, have this as a smart money reversal from this liquidity pool, if it can prove that by breaking these levels up here, because the narrative's bearish, we're not going to assume that. It needs to support that, right? It needs, like, if it's going to be going bullish. The greatest thing about market maker buy and sell models is you don't have to catch it right when it starts. If you can understand and nail down how to navigate the phases, how to identify them, the characteristics they have, and how to operate your model within that, you can literally just wait and let price print the story. And then once it gets into one of the phases, if you are correct on your analysis in terms of what phase we're in, you could then operate within that accordingly. You know, so we could wait the whole time up until price gets even up into this level. And then maybe this ends up being the second stage distribution to get us above the highs up here. And maybe this acts as the original consolidation. I wouldn't mind missing all that up until we get to this, and then be able to jump in line with something that's low resistance. Because that's, if you can identify, for those of you that have watched and seen the market maker models I've pointed out and the second stage distribution characteristics, if you go in and look at that and see how reliable that low resistance liquidity run is almost every time that is presented, you'll be confident too eventually in waiting. You don't even got to rush. We don't have to pick a bottom. We don't have to pick a top. But if we can identify from a low, in this case like a market maker buy model, or from a high and frame out a market maker sell frame narrative and analysis, it's beautiful to be able to just execute there. ICT has said before on multiple occasions that if he could pick one model out of the stuff he provides publicly, if he was like the student, his favorite model would be the second stage distribution in a market maker buy or sell model. And you may ask why. Well, because it's a low resistance liquidity run if you get that identification correct. If you get that right and you're able to frame it out, which I've shown many examples of. I have a lot of examples in the free community and the private Discord as well. But if you go and just study it, you'll see it's extremely effective. And that's why he says that's the one that he would select over everything else. Inside all the phases of a market maker buy or sell model too, right? There's a couple, like 7 different phases sometimes. Sometimes there's 5. If there's one accumulation and one distribution, maybe it's really fast. But inside the phases, wherever you feel comfortable, you can identify any model. Smart money reversal areas, generally there's breakers, optimal trade entries, the YouTube model, turtle soup sometimes if you can catch that smart money reversal in action. Inside the other phases, and like the middle portions, the accumulation and distribution phases, you can find breakers, optimal trade entries, fair value gap entries, order block entries. Every single model ICT teaches can be used with the market maker model framework attached. So that's the thing. A lot of models mesh well together. Like Power 3 sometimes is a market maker buy or sell model, right? Sometimes, right? A lot of the times. Sometimes in breakers, there's, like if it's a 15-minute breaker, sometimes you'll find a 1-minute YouTube model while that breaker is being created. And if you can get the narrative correct, the YouTube model can get you in ahead of the breaker, and then maybe later you can pyramid onto the 15-minute breaker if that was the scenario, if that makes sense. Right? So you'll learn over time that things mesh together, which is the main reason why ICT says you only need one model. Because if you have one model, goals, right, versus the other models, so they overlap a lot. It's a very interesting phenomenon. But that's why when you're looking at the models over the years that you trade, if you do want to add things, you want to make sure that they go hand in hand together. That's why I use breakers, I use the YouTube model, market maker buy and sell models, and institutional order flow entry drill, and then continuations within that, because they overlap each other. And the Power 3, all that stuff as well. All that stuff works well together. So guess what that means? That means you have multiple weapons in your arsenal that overlap, that don't demand too much extra like mental power, because they mesh well together, But you got to have a baseline. That's why you pick one model. Don't be obsessed with a thousand different models and learning all the concepts, like mastering them before you can feel confident. I don't use every single concept ICT teaches. I don't use his Venom model. I don't use Turtle Soup for the most part. Sometimes I do, but I don't. It's not one of my go-tos. I'd rather wait. I don't use optimal trade entry really, other than using optimal trade entry to frame setups, like similar to how I use market maker models. Okay, I use OTE as well to kind of frame out premium and discount, and I look at that from a more large perspective, like nothing lower than the 15-minute. But again, that's me. That's my personal approach. That's my personal view on certain things, and just a testament to the fact that you don't need every single piece of ICT's content. You need to watch pretty much all of it, though, because if you don't have all the information, how are you going to know what's going to work for you, what's not going to work for you? And if you don't give it time to merge these things in order, it's almost impossible to figure out what truly can work for you, because maybe there's a lot of things that don't work for you, you know. And if you try to force something that clearly isn't working after, you know, maybe like a year of testing it, if you continue to force it without making adjustments, I mean, you're doing yourself a huge disservice. Your mindset in terms of learning and how you need to navigate things is a little bit off, you know. So again, you want to experiment, right? This is why you don't want to trade live at first. Just because you learn one model doesn't mean that one model you're trying to practice with is going to be your model. You know, it doesn't mean that. The only way that you discover this is through time and time on the chart, you know, and organizing your thoughts in a specific order and system. And then, of course, studying each element on its own over years. Okay. The easiest thing to use, though, is the YouTube model. And that may not be the facts for someone else. You know, it may not work for them. Maybe they are better with breakers. Maybe people don't like to trade on the 15-second chart. Maybe they don't like to trade on the 5-minute. Maybe they are more comfortable with the 15-minute, you know, using a little bit higher time frames. You see, so there's many directions you can take this. And this is a beautiful thing in trading because it allows you to make this personalized. It allows you to build your own system that no one else is using. Even if you use the same model, the time frames could be different. The interest in the trending vibes versus the counter trend vibes may be different. Maybe you're a contrarian, you know. But of course, there's non-negotiables like the important liquidity pools, how you manage risk. I mean, you got to have a pretty, I mean, even that kind of varies because some people are more risky than others. But again, it depends on the student, right? But that's why when I focus on what I'm teaching, I teach non-negotiable things that for the most part don't really change, like how we're analyzing the structure, invalidation, validation, bias and narrative identification, my risk protocol, right? It's a very basic risk protocol and it's effective. Doesn't make you think too much. You know, so, and I keep everything in mind that's non-negotiable, and I really ram into those because the more you listen to that stuff, the more familiar it becomes, and your customized approach outside of the non-negotiables can be focused on as well if you have a good foundation, you know. And clarity comes from foundation. It comes from experience, and it comes from knowing what you're doing and seeing someone else do it. It's like going to a job and shadowing the best employee, you know. Like you're going to learn a lot of their good habits and learn how to do the job effectively. So then eventually, it's like an internship, right? So then eventually you can emulate it, but you'll still have your own style of doing things. You know, it's the same way with trading. You know, I don't know why people look at this as if it's like some foreign object. Like it's just things are not like normal reality doesn't get applied to trading when it comes to a lot of people's mindset and how they view things. And a lot of it's from the marketing, unfortunately. It does a good job of pulling people in, but, you know, at some point, we got to kind of get away from that and focus on what really matters when we get in to the battlefield. Okay, so yeah, just keep these things in mind. Very important. Optimal trade entry is an amazing model. Every single model ICT teaches is amazing. It just depends on what's going to be amazing to you and how are you going to use things. There's some models that you may just use on the higher time frame to further confirm a narrative. Like, for example, market maker buy and sell models. It is a potential entry tactic because you can identify the phases and characteristics within them. Use the market maker buy and sell model idea as a framework, right? Just like to get a confirmation for navigating what price should do next, you know. So that's the thing. I mean, you could use every model as a higher time frame framework to then set you up with a narrative. Like, say you like breakers, but you can't execute them on the lower time frame, but you can execute the YouTube model. Okay, great. Find a higher time frame breaker forming. Once it forms that breaker, go down to the lower time frame and then try to find your model that you're comfortable with. It's just an example of using some models as frameworks, okay, and like significant sequence of events that'll deliver price in a particular direction, and then using lower time frame ideas with a different model, So people don't think about this like this. I don't think anyone on YouTube has even taught this or even mentioned this way of thinking, because most people don't know what the hell they're doing. Okay. Or, it could just be everyone's got their own thing, and, maybe that's something they never thought of. But again, that's something that can be very universal, as long as you can identify the elements on the higher time frame. So definitely a school of thought you want to consider. But again, you want to have a baseline model. You don't want to be doing 1,000 things. You may see me doing multiple things. If you're in the private community, you may hear me calling buys and sells and navigating both sides. But we stick to a narrative, right? But just because that's happening doesn't mean you think that in order for you to be confident in yourself as a trader, I don't think that that's something you are mandatorily having to do. You need a baseline first. You don't see like a new employee demanding that within the first week or first year, he's getting paid the same as someone that has 10, 20 years experience. This is two different levels. So you have to know where you're at, be honest where you're at, and manage your expectations within, whatever can be expected at that level. You know what I mean? It's not something people like to hear. Okay, we want to buy a Lambo tomorrow. Everybody, right? But, and then of course, if you look at other traders, it's part of the reason why I don't just shove my, profits down people's throat, because I very well could. And I do it a couple of times a year, for some that may be on the fence and want to just see, is this real? So I just do it for them. I don't do it for marketing at all, because it attracts the wrong people, and I don't want to deal with annoying people. For the most part, I want you guys to want to learn. So yeah. So these are just some things that are very important to think about. A lot of people don't think about how they need to look at things. They try to get ahead of themselves. They look at other people prospering and succeeding, and they compare themselves. They say comparison is a thief of joy. So again, if you're comparing your journey where you're currently at, maybe you have a year experience, 2 years, 6 months, whatever. If you're looking at someone crushing it that's put in half a decade or more, it's kind of unreasonable comparison, and it'll put negative thoughts in you that again are unavoidable, or that are avoidable, like many mental barriers we face as traders. Okay, so don't lose sight of that. Keep that stuff in mind. I know that happens a lot. I get DM'd probably a couple times a week about that specific topic, and comparing themselves to either what I'm doing, even not showing money, just seeing what I'm doing, and then they're upset that they're not able to do that right now, not realizing that the person you're comparing is someone that has put in more than 10,000 hours, probably 50,000 hours. Like I've been doing this every single day for almost 6 years. Not one day have I taken off at least looking at the chart and studying. So unless you're putting that type of effort in, you can't compare like your own performance. You'll get there, but again, it just depends on how you operate, how dedicated you are, how much you study. Also, if you're, watching someone, how much are you asking questions? And are they willing to teach you and be open with answering questions? Because a lot of people aren't. They just want you to come and watch them do what they're doing because they have ego problems, and they just ignore everybody. And it's unfortunate, but it's one of the reasons on the long list of reasons I have for me going public. Me having a community is to try to be the change that I want to see in the industry. And hopefully you guys can also pass that, but yeah, so keep that stuff in mind. Again, because there's no news that's taken place within at 5:30, and I'm not super excited to engage just yet. That's why you haven't seen me spend a lot of time on the lower time frames recently, at least for like the last hour, because I want to see what happens. you want to frame things and your ability to, or when you think price is going to deliver, wherever you think it's going to deliver, from the higher time frame. Even the 15 minute, right? The 15 minute is still a higher time frame to the 1 minute. And if you want large range moves, right? If you want more meaningful price delivery that doesn't go only 5 points, you want to make sure you're looking at these upper time frames. And then, like I said, with that breaker idea on the 15 minute, right? If it goes to a 15-minute breaker, maybe you drop down, then look for your model to show up within a proper time. It's the same thing with all the other time frames, And if you frame things like that, you keep that as a baseline or like a pillar to the way you try to frame out ideas, and then, of course, you wait for time, you will have amazing results. If not monetary results, you'll have amazing experiences in the marketplace. And you'll be able to get really confident with calling moves that really, really deliver beautifully. Hundreds of handles, Higher time frame liquidity levels too, like previous days highs and lows, months highs and lows, weeks highs and lows, session highs and lows, 8 hour, 4 hour, 1 hour highs and lows. Like those are very, very useful liquidity pools, right? So yeah, write those down if you haven't already. I always give a list of liquidity on a weekly basis, monthly basis, levels that are non-negotiable, things that never change, and students that have dug into that concept have seen some pretty amazing leaps in their understanding and navigation skills. So so we're at 6:15. We have 15 more minutes. Let's actually go here. So I haven't placed this yet, so I think I'm going to do that now. We're getting closer to a time when hopefully something can take place. What kind of news do we have left? So yeah, PMI, it's going to be pretty, PMI is pretty aggressive. So yeah, we'll see what happens with PMI. PMI stimulates a tremendous amount of liquidity for whatever reason. Never really even read into what this is. What does it even mean? Global index based on surveys purchasing. Okay, so it has to do with commerce. So, okay, that makes more sense. That's why it's aggressive, because depending on sentiment for customers, whatever announcement takes place with this, obviously will have an impact on the market, because commerce affects businesses, like if people aren't buying things, like CPI, that's why CPI is so aggressive. Like if something's negative, the consumer sentiment is negative, it'll be very, very dramatic to the downside with the market. Right? Because then that means businesses aren't making as much money as they want. So the money flows are kind of slowing up. And I guess PMI has something to do with that as well. Consumer, it's a consumer. Purchase on purchasing managers in the service industry. Oh, this is in the service industry too. Okay, so it's not commerce specifically. To rate the relative level of business. That right there it is. That's what PMI is. And that makes sense why it is so volatile. So it means Purchasing Managers Index. I didn't even know that. I didn't even know that it was called that either. Never looked into what it was. I just knew it was something volatile. I mean, that just shows you that you don't have to know what's happening, like what it is exactly, but it kind of helps to dissect why price responds to certain news events in particular ways, either lacking volatility or having pretty strong volatility. Tomorrow, you guys will see PMI is going to be pretty aggressive, so yeah, keep that in mind. Again, I just want to remind you guys, there's a couple people that's hopped on as of recent. So if you guys get value from the content, don't forget to like the video. It helps the channel spread the word. And of course, if you're here all the time, you might as well subscribe. If you support the channel, it's greatly appreciated. I know you guys have this vast world of YouTube and the internet, yet you decided to come and spend time with me, and that's very appreciated. You know, it's easily applicable, sometimes a little more complex, but easy to apply, so you guys can almost instantly start to improve and get your focus in the right place. So again, thanks for the support. But if you haven't liked the video, if you haven't subscribed, definitely go do that. And if you have friends that can benefit from this, or anyone you know that wants to be a better trader, or if they can add to the conversation, definitely invite them to come and join the family. So yeah. And I'd rather you guys spread the word than, you know, YouTube spread the word, because it makes it more tight-knit as a community if, you know, for the most part, most people know each other. You know, it makes people more comfortable as well to ask questions, because I know that a lot of people are insecure about that. They don't want to sound dumb or whatever. Just know that there's no dumb questions. Anybody gets out of line, they'll be dealt with as well. So if you have questions, fire away, always. So yeah, I'm going to continue to monitor, given the fact that we're getting closer here. We have this low here. This is London's low. Okay, so London's low is part of the liquidity list, the identifiers that we use in terms of common liquidity pools that get targeted. So London's low, got London's high. And again, notice how this is all inside of a 8-hour fair value gap. So we're going to want to monitor how this is going to behave. I can say that if price does displace away from this, it gets outside of it aggressively, it may turn into a balanced price range type of behavior, and it may look to want to send price a little bit higher. Does that specific phenomenon taking place throw away my interest for higher time frame narrative being bearish? No, it does not. We have our levels set that would break that opinion for bearishness and turn to bullish. That's this high up here. Okay, because there's multiple PD arrays, and we have no problem waiting. And if that's the case, you know, if it does turn into that, we may see a, like me and Fritz were talking about earlier. Okay, so if you sit on your hands, don't look at it as you're missing opportunities. Look at it as you're gathering intel, because it's honestly exactly what you're doing. And if you have the right mindset and you look at things from that perspective, which is how everybody should look at it, you'll see more effective, more dynamic engagements if you just submit to the fact that it's intel gathering. You're not missing a move. You may miss a move, but even that doesn't matter. You know, and if you've been here for a while, you see that, you know, we're able to call out tons of moves, both sides, no matter what the trend is, because we know how to navigate retracements, consolidations, and one-sided delivery. And again, that's all showcased. So again, the more time you spend here, the more you'll be able to see that. And then the things that we do live are a testimony to the efficacy, to what it is we do, and a testament to how amazing these concepts are, you know, and how thankful people should be that ICT shared it, right? So, but hey, everybody has their own opinion of him, right? So yeah, this is, let's go to the other indices. Let's see, do we have SMT? So I don't really see any S&T type of vibes. I do kind of see this trend line liquidity that is kind of concerning for shorts, at least for now. Again, we have this new week opening gap in here. So that is definitely, let me get back to regular contract month. So yeah, we got trend line liquidity. Again, them breaking out to fill that in is not really concerning to me. It may look to do that, right? It may look to pull price up like that. The speed in which price got down to this low, generally when price opens up and does that and doesn't provide the consolidation vibe Sunday going into Monday, if it and that's in alignment with the higher time frame narrative, if it doesn't do that and it does something quick like this, whether it gets to a buy side or a sell side liquidity pull very quickly like you see here, a lot of times that will trigger in a retracement. But the thing is, again, we don't take that as a reason to disregard our higher time frame narrative. Again, we are very slow to change our opinion, okay? But we're very fast in terms of thinking when it comes to, either taking profit for the most part, especially if price is crazy, or protecting capital, okay? It doesn't mean that if you're in a move that's running aggressively in your direction, it doesn't mean you quickly think, okay, just let me get out. If you are scared to hold for more than an hour, then obviously, bag the minimums, 20, 30 points, like I always talk about. Because, I posted something on Instagram, something that I heard ICT talk about a couple years ago. And I encourage you guys to go listen to that. Every single thing you see I post on Instagram is something that I've studied intensely over and over and over again. And I just share very important key elements to, what's got me to where I am when it comes to thinking, right? My psychology. Sometimes it's tactics, sometimes it's trade management. Sometimes it's, a bunch of different things. I could very easily come out here and just say this stuff myself. But I have no problem giving credit where credit's due, and maybe that's partially why some grow more than others in terms of social media, because they want to act like they created something. They want to act like it's, there. I can come out and act like, everything is mine. This is my system, the one that I use, the way that I put things in order, the way that I make decisions, the models that I use and how I use them, overlapping and, the dynamics between all that. That is technically my system. But did I create all the elements on my own? No. And I don't see why that's something that, is looked down upon, right? At least from what I've seen. A lot of people come out here try to act like they created things. Technically, the way in which we apply stuff is ours, but, the concepts, the elements are, they're very rooted in one man. And, so give credit where credit's due, but be encouraged that the system you create is yours. That is a product. That system, if you're able to show it and it's accurate, you should have pride in that, and be very, very proud of yourself that, you're able to create something. Because we're creating algorithms. What we do is an algorithm. It has to have if-then scenarios, and it has to do, if this does that, then I'll do this, and what disrespects it, so there's no opportunity. All that is algorithmic thinking, So technically, look at it as you're creating an algorithm when it comes to your model. Something that I thought about really early in my trading journey. Seems more interesting that way, right? So yeah, let's see what Fritz said. He said, how many times do you think an order block can be revisited? Well, if it's an order block that we want to execute on, we don't want to see price hang around an order block too much. We want to see it quickly move. There's reclaimed order blocks, so it can be reclaimed a couple times. But again, order blocks are balanced price ranges. So how many times do you want to see a balanced price range traded into multiple times? How many ranges deliver quickly away and not have to come back? Unless, of course, it's going to invert and turn around entirely. So it could be, there's no specific limited number, okay? With fair value gaps, they can be revisited a couple of times. Pretty much every PD array ICT talks about also, there's a key gem here that most people don't know. Pretty much every single PD array, including breakers, turn to inversions when they are violated. Okay, so if one idea is invalidated and you can now make an argument for the opposing side for whatever reason, the PD array that gets violated turns to an inverted PD array. Whether that's a fair value gap, whether that's an order block, whether that's, what other... I think those are like the main ones that I focus on to identify inversions, because you could see it till you go in there and look at it on your own. You'll see evidence. Don't just take my word for it. Go in there and observe. See when things fail. ICT has mentioned too, very light-handedly, that when something's disrespected or when price goes against you or when there's like cracks in correlation, they're telling you something. And you have to be receptive to the fact that it's telling you something rather than thinking, oh, I'm wrong and I'm never going to succeed and all that stuff. That negativity will block out something positive for you. Like it'll block out your ability to think critically and, be able to identify the overall signals that it's sharing with you. The intel that it's sharing with you, right? So yeah. And then of course fair value gaps, if it trades through a fair value gap, and we're expecting that it's going to continue in that direction, we don't want to see the middle portion of a fair value gap get violated. Like this, for example, if we run through this fair value gap here, this 8-hour fair value gap, let me mark that. A lot of you guys probably don't know what that is. So if this was to be violated here aggressively, like if this continues and it gets above this, if we're going to try to favor buy side, say that was what we were going to anticipate, the middle portion of this fair value gap would become invalidation point. Because if it overlaps two fair value gaps and it's going to continue, in this case, possibly to the buy side, hypothetically, that's not what I want to see. But if it was to do that and we wanted to make an assumption it's going to go higher and continue, this middle portion of the fair value gap, the swing low here, and maybe I think this is possibly even a bullish break, a bullish order block. Yeah. So, all that stuff being said, if the low here was violated, again, that would turn us to go lower again, right? So we're going to use that information right now as well, what I just mentioned. So yeah. We can actually get into a call this week talking about inverted PD arrays, and whatever else you guys want to talk about. But see, this right here, this is why it's important to ask questions, because there's some stuff that I will not mention a lot. It's just circumstantial, but if you don't ask the question, you're not going to get the answer. And then of course, there's probably other students that have the same question that maybe are fearful to ask or just, don't want to ask questions, So yeah, you asking questions benefits not only yourself, but it benefits the community. Because now when people watch the replay, they're going to hear that explanation, right? So keep that in mind in terms of why me encouraging you to ask questions is so important. Okay, so yeah, we're going into the 6:30 time. We did have this wick lower here. So again, I want to see what price is going to do within this area. DXY is still running higher. I don't like the fact that London was pretty aggressive. When London's aggressive, a lot of times price will turn against it in many cases before it's ready to actually continue. I'm going to wait because there's no news. I'm going to wait till the 550 macro or 5 minutes before that, so we can continue to just let price give us intel. Right, so yeah. And again, part of my rules, for those of you that pay attention to the rules I mentioned, part of my rules is I don't take an execution when it's close to the open price. I don't do it. I just want to correct, like say, oh, this is a buy possibly. Say it ends up running higher from here. I don't care. Okay. I've been stopped out over the last, almost 6 years more often while being correct at the end of the day because I could not wait to take an entry. Just because your model shows up doesn't mean it's a valid time to engage. There's other elements. Time has to be in place. Where price is at needs to be in place. Your targeting has to be in place. A higher time frame narrative needs to make sense to you, right? At least for how I do things. I need the higher time frame to be in alignment. So let's actually go do a SMT analysis here. We do see that there is SMT at the highs. That's a beautiful thing to see. So we're going to keep that in mind. We got the S&P and the Nasdaq not breaking the highs. So that indicates that if price does short, the best shorts are going to come from the Nasdaq and the S&P. The Dow is going to be somewhat of a strength holder. The Dow did have a more dramatic decline than the S&P and the Nasdaq. So the Nasdaq hit the gap in here, but the Dow failed to get up into the volume imbalance, and so did the S&P. So from a higher time frame perspective, we see the Nasdaq is actually the strength holder, but on the lower time frame, at least for the time being, they're showing us the weak assets. So if we zoom in like this, right? So again, my anticipation, what I am favoring this morning, is trying to see price decline. We got this SMT here. We still have that slight SMT I just highlighted also on the higher time frame daily chart. So DXY seems to be wanting to run higher. This is what I want to see with the yields also, but also with the DXY. I want to see them go higher because the things that are happening in the U.S. economy are positive for the U.S. dollar. You know, so I've been waiting to see that confirmed. And we'll see if it wants to give us that this week. So yeah, we got this fair value gap in here. So let's watch this. Let's see if this ends up breaking through that, turning that into a reason to short or set up a short idea. Notice how I'm not worried about missing a move in here. I don't care. First of all, my rules are I don't take a trade at 6:30. Has that stopped me from doing what I've done the last, almost 6 years? Those rules, have they stopped me or hindered me in any way? No. They, for the most part, protected me, kept me out of bad moves. And they'll do the same for you if you allow them to. And if you never overtrade and over leverage, but you're consistent and you're able to find opportunities and reliably know where price is going to go, if you don't overtrade and over leverage, eventually the numbers will work themselves out. But if you don't follow certain rules, certain positive effects from those same rules will not be able to manifest. So yeah, this here, if we do blow out this low, I mean, this could end up also being a market maker sell model. Consolidation, accumulation, reaccumulation, especially if it delivers from here. Maybe we could wait till price gets a little bit further down there to think about a short. Go from this low to that high. The first leg got to the 50% level, so let's continue to watch this. This is a mess in here right now. So we're going to let it breathe a little bit, get a little bit closer to the macro, and see if something can be provided with the proper timing. So yeah, let's see how price wants to deliver with this fair value gap. That's a pretty strong wick. We are above the fair value gap in here, 50%. So again, if it was to run through it, which I don't think is going to happen, I think we're still going to favor shorts. But if it was to run through it, then obviously that's supporting possibly blowing this out, maybe getting up to this level here. This is a contingency plan for the draw on liquidity. We're in a bearish environment, but I wouldn't be surprised if they come back and try to clean out some of this. Notice the wicks in here. If you drag that over to this, it left the fair value gap open. Right, so overlapping wicks and the theory behind balanced price ranges is another reason why you can make an argument for fair value gaps being left open in some cases. Higher time sell side or buy side deliver has to be only on the. Since price is fractal, does it mean that if we see sell side delivery on the lower time frame, would that make the range a balance? Since price is fractal, does it mean that if we see sell side delivery on a lower time frame, would that make the range a balanced price range? Or is higher time frame sell side, buy side, or buy side delivered to be? No, so everything's fractal. So you look at something delivering on that lower time frame, you have to realize that that's working within whatever the narrative is on the higher time frame, right? So if there's a balanced price range on the lower time frame, that's a piece to the details that formed the higher time frame delivery. Okay, so there's on the lower time frame, there's multiple different opportunities versus the higher time frames. Maybe there's one opportunity on the 1 hour per day, but there's going to be like 50 on the lower 30 seconds chart, right? So again, if there's balanced price ranges on the lower time frames, you still want to see delivery take place on that higher time frame. Like you still want to see two overlapping fair value gaps, for example, overlapping on the daily chart versus just focusing on the lower time, because that means you're putting more focus on the lower time frame delivery, and that's not what you want to do. You want to focus on the higher time frame, and the lower time frame needs to show support to that upper time frame, right? It's in the process. You're seeing the details play out that is forming that higher time frame balanced price range when you look at something on the lower time frame delivering, and maybe you see a couple balanced price ranges there on the lower time frame. When it comes to bias and narrative, for validation, invalidation, for higher like direction, you want to use higher time frame levels and not so much what the lower time frames are doing, because those are all creating the picture that's forming on the higher time frame. You know, so I kind of see where your question's going. That is an amazing question. That's one of the things that'll get people caught in the weeds when it comes to certain things. But yeah, I hope what I just mentioned makes sense. Because when it comes to activity in terms of executing, like more recent, like what's going to happen next in the next couple hours or hour or 20, 30 minutes, obviously the lower time frame is important. But where that's overall headed, you know, whether you know, something's going to be useful or not for that higher time frame narrative, obviously you want to make sure you focus on that higher time frame. You know, and even though you see a balanced price range down here, right, like this may create a balanced price range here. They may get up above this on this lower time frame, but then again, it also may look to displace, right? And this may just be a retracement on this higher time frame. But if you're stuck on that lower time frame, trying to put a whole lot more stock in that lower time frame rather than what you see happening narrative-wise on the higher time frame, you're going to get fooled. You know, so a balanced price range here, or any type of bullish PD array or bullish price delivery, if the higher time frame is going to remain bearish, they're going to be violated at some point because the higher time frame holds precedence over the lower time frame delivery. Right, and the lower time frame is just setting things up. You know, in this case, it may just be a retracement to set up further shorts. So if this does get outside this 8-hour fair value gap, but it sweeps the high and then violates it again, that balanced price range for a buy side delivery moment in the market inside that downside delivery on the higher time frame is going to prove to be short term in nature. Right. So again, higher time frame will always hold more value than the lower time frame, but the lower time frame, obviously, if you navigate that to find opportunities, you want to consider, you know, all those perspectives together, because you'll get lost. You know, someone seeing this is probably thinking, oh, we're going to buy and probably not short anymore. I'm not confirming that until the higher time frame confirms it, until we start breaking these levels up here, right? Because you could, you know, at this point when price trades outside of this 8-hour fair value gap, this is going to be classified as a near-term balanced price range. So, and if it is going to want to push higher, it's going to have to be respected. Then that'll start painting my narrative and interest for us potentially having a more protracted, more meaningful run to the buy side against that higher time frame bearish narrative. That may actually end up changing things later on. But again, we need to wait for higher time frame delivery in order for us to make any type of higher time frame adjustments in narrative. You know, any buys right now have been short-term in nature. The fast-paced move down here to this retracement, the speedy retracement, is a very telling sign that this was going to take place. It was going to draw up a little bit. Again, we have this. I would have preferred if we were going to show evidence that it was going to be extremely bearish and not really favor any type of buy side delivery. I would have preferred it, you know, leave that high I just showed you and give displacement down below here. So far, it hasn't done that. So we're approaching the macro here. So I want to see how price is going to behave up here. And if nothing to short arises, or if no shorts arise in here, or they don't give us any type of opportunity, it just keeps running higher, then again, our contingency plan will potentially end up setting us up with this as a possible market maker buy model, especially if DXY declines. But again, you know, we got to wait for these things. At least for me, I'm not interested in taking a buy here. You see that I outlined this fair value gap in here. Once it got above that and created this order block, if I was to zoom in there, you know, there's, you know, possible chances for me to have executed in there, right? I wanted to see this as a possible market maker sell model too. Clearly, it, you know, didn't want to do that, right? We laid out different levels to observe whether that was going to take place or not. Clearly, it didn't. Clearly, my rule of not taking trades close to the 6:30 time saved a bad entry, or me forcing something to short. You know, so you see that the rules are there for a reason. You see that certain things need to take place, and if it doesn't offer you something, like right now it didn't offer me a short I was wanting, because it didn't offer it, I'm just not taking a trade yet. You know, and we'll see, is this going to lead to a weekly buy side delivery? Because, you know, we got down so quickly. Is this the weekly low? Right? We'll see. Most likely throughout today, by the end of today, going into tomorrow, what the overall view is going to be for the rest of the week. So far, right, we have this strong displacement here. If you go to the 1 minute time frame, depending on your model, there wasn't really anything that took place. Even for me, if I was going to look for a buy, there's nothing in here for me to execute within my model. So did I miss anything? Should I sit here and think, oh man, I suck at trading, I'll never be able to succeed, oh, this doesn't work? Or should I be thinking that way? Or should I be looking at this as like, okay, my model did not show up. One model I use did show up, which is the institutional order flow entry drill, but we were talking about more important things, right? So fair value gap, notice the overlap with this wick here, okay? The lower portion of that could have been expected to hold if our anticipation was it was going to go higher. You know, price delivered, because the fair value gap here was overlapped with this wick. Notice how it didn't even try to go deeper into it. It left it open. People ask all the time, why and when do fair value gaps stay open? You know, what's the logic behind, you know, why it leaves them open sometimes, and how can I use it? You know, how can I use those areas, you know, and anticipate it's going to stay open? Here it is, right? Overlapping wick. Why? Why is that phenomenon making it so price doesn't have to trade into the fair value gap fully and leaves it open? Because this is a balanced price range. Okay, it's a baby balanced price range within this price leg moving higher. Okay, so yeah, very important, very, very, very important. Huge leap forward for those of you that use fair value gaps. For those of you that ask that question all the time, that's a massive leap forward. A lot of times fair value gaps too get left open if there's a PD array within the PD array matrix that is before the fair value gap. Like for example, just toss this out real quick and then we'll get ready for the silver bullet. Where is it? If I could find it. Where did I put it? Sorry, give me 1 second, guys. I'm trying to look for something real quick. PD array matrix. Where the hell did I put it? Oh, there it is. It was hiding from me. Whoops. All right, so okay, so this is the list of the PD array matrix. Okay, so if price is retracing, or if it's going to go higher and it's retracing to go, to downside to go higher, equilibrium's right here. The first thing you want to look at is mitigation blocks, bullish breakers, liquidity voids, or just gaps where there's no trading, like new week opening gaps or whatever. If it's applicable, right? This is a critical thing. If it's applicable, okay, you're not going to have every single one of these available at every single moment in the market, But depending on what's available, these first three up here, if there's one of these that's ahead of or closer to the retracement than a fair value gap is, say fair value gap's down here, but a breaker high is here. That fair value gap is going to be left open as a breakaway gap. Okay, because price seeks, the PD array matrix is so important because it shows you the order in which price seeks PD arrays given whatever retracement you're going into, right? If it's retracing lower to go higher, mitigation block, breaker, liquidity void, then fair value gap, right? So if a bullish breaker is there, it's going to use that first, and it's going to avoid using the fair value gap, order block, or whatever other PD arrays down below us if they're available. And it's the same thing when you're retracing higher to go lower. The order doesn't change, but this is a reason, aside from balanced price ranges, why price will leave fair value gaps open. Another thing too, a breaker is also creating a balanced price range, right? So again, that's just further information as far as why it would hold at a breaker, even if a fair value gap's there. Sometimes they overlap, they call that the unicorn, but they don't always. And you will miss opportunities if that's what you're demanding all the time, over and over and over, nonstop. And, that's okay. If that's what you want to do, that's what you want to do. There's nothing wrong with it. It just, again, you have to just submit to whatever it is you're trying to do. All right? So, yeah, let's get ready to try to identify something here. DXY is seeming like it's wanting to decline here. This has had a really strong movement higher. So what we're going to do is move up here and see where price reached into. So we got that wick. Damn, I'm hungry. Should have ate some breakfast. Yeah, so we see, again, we have this retracement in here. We see the midpoint of this wick. It's not random that it's pretty perfect in terms of delivering to the midpoint of that wick right there. So yeah, let's see what price wants to do here. So yeah, we got this regular trading hours gap down here too. It's 247 points, similar to how this one was. It was 300. When it's over 120 points, a lot of times the price doesn't really want to get back into the midpoint. This may be a different story though, possibly. I don't know how interested I am in trying to push a buy in here. I'd more rather get intel rather than say, oh yeah, I'm gonna look to buy right now, because again, narrative is bearish, and I am very, very strict when it comes to not changing my narrative. Of course, that doesn't mean I don't trade counter trend ideas, because I do. I trade both sides of the market all the time. Today, though, it's almost the end of the month. Price is still kind of coming off of this nonsense it's been doing. Things look like they're somewhat getting in alignment with their correlation, risk on, risk off behavior. But again, we'll just continue to feel things out. It looks like the currencies are still interested in blowing out the highs. We do have S&P relatively. But again, the market maker buy model here, I think for GU is going to complete. Of course, if this declines here, that will support that idea. But DXY getting really aggressive to the downside will also potentially support this delivering price through to the buy side. I mean, that can be a reasonable argument with the identification of this low being taken. Relative equal highs up here as a target. And then, the fast-paced move here with this fast move up, showing they were interested in quickly completing a particular level of liquidity, and then the response away, shifting market structure, continuing to go higher. We've now violated the 8-hour fair value gap. So again, I want to watch and see, can we get a retracement into that? And then if it does that, doesn't displace at all back below this fair value gap, maybe it doesn't even get down below this high. And then maybe on the lower time frame, right, maybe we see something like this take place. This would be something that would pique my interest for, potential adjustments to try to buy. If it continues to support this 8-hour fair value gap, if it does give some type of retracement, maybe it doesn't go this deep, right? If it doesn't go that deep, it's even more convincing that we may see price, at least want to blow out the midpoint of this, maybe even fill in the rest of the regular trading hours gap. All right, so if this type of scenario took place and it shifts like this, leaves a fair value gap, maybe a breaker or order block, because that's what this pattern is here. It's 3 different things. Then of course, if it does this, then we'll be able to adjust and get in line with that. I'm not convinced that this is going to push this higher, like for the whole day. And of course, I may be wrong, but that's my thoughts and that's my opinion, my shameless opinion. Okay, and that's what I'm going to look for in order for me to either sit on my hands or look to invest my money. But I care about my money, and you should too. So we are demanding in price, especially given the circumstances that we're involved in. Things are, a bit chaotic. I don't like the fact that DXY left these equal highs up here. That is fairly concerning. But what I do like when it comes to DXY is the delivery we've seen. We've seen this. This is a beautiful retracement. Remember what I said about this wick here. If it's going to be continuing to be bearish, we won't come back up into that level. Notice like a week ago, I talked about this bearish breaker. That beautifully delivered. I wanted to see us reach into here, but I said if it stays below that monthly breaker, it's going to be very, very weak. Or very, not weak, there's no strength and weakness, but very interested in seeking sell side. And it absolutely did that. Blew out these lows, and it was on point. So yeah, it's interesting because DXY also had a very aggressive, fast-paced run to the downside here. So it's, it's kind of interesting how all the U.S. assets have done that, and now they've started to retrace. So we got to see for the DXY. If you look at this area in here, that's actually a bullish breaker. So we'll see. Is that going to hold price and push it higher? That would have me convinced that we may look to fill in a little more of the fair value gap that's above us. But if it doesn't and just ends up slamming through, look at this, overlapping fair value gaps. It should be able to act as a balanced price range. Notice how it did here to get us above the high. So now this high to that low, like I said, it's a breaker, but the mid portion of that ends up being the overall balanced price range rather than just this little element in here. Now we have this as well because it took the high, took the low, and now we've delivered through it. We're inside that higher time frame bearish PD array though, so we'll see. If this gets violated, again, this level should hold if it's going to push us higher. If the higher time frame PD array being the fair value gap, if that pushes price lower and starts to contest this stuff and it violates through, then obviously our target goes down to the lows here. Okay. I prefer to see that happen because we're in a bearish trend. We have seen a very strong movement higher. Maybe this weekend's in a bullish week. But again, we kind of aggressively ran through to the quarterly fair value gap. So that's another specific PD array that's also held up in price and pushed us to the buy side a bit. So there's some things happening that we're trying to get intel on. It seems as though, remember what I mentioned about this area here? If it was not going to displace and it was going to look to continue to rally on that lower time frame, notice how the idea I mentioned played out, right? What I wanted to see if I was going to look to buy, right? Something like this. Staying above the level, right? It didn't quite get down into the 8-hour fair value gap. That's very interesting. But the scenario to buy, to aim for the regular trading hours gap, pretty much came to fruition, okay? Of course, I didn't execute, right? Because I'm going to be extra patient today. But again, if you had the assumption, aside from my opinion, that you were going to trust price running higher today, and then maybe you found an opportunity, don't let my opposing opinion discourage you from thinking independently or think that you're doing something wrong or maybe you missed something or whatever. This is just like the view that I have when I'm holding a narrative, right? And if it proves me wrong, I'll let it spend a day or two proving me wrong at times. Okay, sometimes it takes that long for me to want to really put, because I have real money at stake. Okay, it's not a demo account I can reset. So, I take this very seriously. And these are, just some of the ways I navigate. And, maybe you're more risk heavy, or maybe you're more risk averse. Maybe you will not look to execute on a day that goes against your initial idea. There's nothing wrong with that. Or maybe you were more aggressive and you thought that, okay, I like this. This is my model. Run on stops, fair value gap, Christian highlighted. We got that shift in market structure, fair value gap. I'm just going to execute there to target the buy side. Maybe you thought that. There's nothing wrong with that. The contingency plan up here is the regular trading hours gap. Like I said, I am very interested in wanting to see what's going to happen when it hits that. Notice the middle portion here. This is the mid portion of the wick. So that's somewhat convincing. The price may not be done entirely pushing to the buy side. Delivery to the downside, strong delivery to the buy side. We shouldn't have to come back down to the middle portion of this particular price delivery if we're going to go higher. Okay, so it should be able to respect this, probably leave this open. Should act as a mini balanced price range in the price leg moving higher. It's like building blocks, right? One balanced price range on top of another. And then once you start seeing multiples of them getting violated on the lower time frame, that's showing you something. It's telling you, hey, it's not supporting, the different elements are not supporting price, in this case going higher. If it was to displace and break multiple balanced price ranges, this little area in here, okay, if it was just to displace, especially with the higher time frame narrative being bearish, okay, if that just goes against you, then obviously you have to navigate it and walk it to a PD array that could put us back in line with the overall narrative. But then once the response happens and things like what I just mentioned, the balanced price range here, the one here that delivered, once that stuff starts getting violated, then you're pretty certain that you're back in line with whatever price is looking to do at that time. In this case, it would be bearish. Okay? So yeah, that's what I'm wanting to see. I want to see, I'm allowing this to run higher like this so I could see, is this going to set me up for the larger move that's going to sell off potentially? So I do see that the SMT has now been violated. So that is very interesting. All right, so we notice that it took the liquidity here. Now again, we have this fair value gap that's overlapping, right? We have the equilibrium from this low to that high, right? It's right there, so it's kind of hung around there a little bit. Now we're getting up into a potential premium here based on this range that we're trading in the middle of. Again, line in the sand, long term. Line in the sand for long term, it's going to be some of this stuff up here. Okay, so multiple PD arrays to the buy side. More near-term signal is these 3 PD arrays in here. Gap here, fair value gap, middle portion of the wick, middle portion of the wick, swing high. Those are early stages, early signs, like an early warning sign that things may look to change in the overall state of delivery. Okay, so if those all hold and we get displacement, I'm still okay with taking shorts, right? But if we're going to let this mature, and if it's going to end up getting through that, it's just going to really present us with the idea that when price moves very quickly to a particular liquidity pool right out the gate, doesn't really spend much time waiting around, and then gives a strong move back away from that, like going back into, in this case, the strong, quick moving short that took place to start the week. Now, we talked about this also in my private community, called it taking out this low. But if it does this response and we do end up getting up into here, you want to journal that, right? When price moves very quickly to a liquidity pool, right out the gate, right when the week starts, it's in a hurry to get somewhere for a reason. Maybe that reason is to do something like this, right? It seems like that was the reason it was so in a hurry to get down there. Why? Because it triggered in this liquidity and now has started this strong retracement back to the buy side. Right, so yeah. So notice this very important fact. I came in with a particular view on price. I've been waiting for that view to kick back in alignment, right? Since it has not offered it, what have I done? I have stuck to my rules. I'm not flip-flopping. I'm not demanding anything until it proves that it wants to go in a particular direction. Does that mean that, does it mean that I miss these moves? Technically, I miss these moves. This one specifically, right? This one, not so much. Not really much of a model in here. It did do somewhat what I wanted to see it do, which with what I was anticipating if a buy was going to set up. It didn't do it as cleanly as I would have wanted it to. That would have made me comfortable. This one in here was a institutional order flow entry drill. So that was definitely a missed opportunity targeting the buy side up here. I wasn't going to be able to confirm that we were going to run higher though until I saw what happened within this 8-hour fair value gap. Because it could have very easily used this high here and used that to trigger in further shorts to come and take out this trend line liquidity. And then just kick back in alignment to come, blow these out. We got relative equal lows here. Relative equal lows here. Huge pool liquidity down there. And then, of course, the previous day's low down here. Right, so, yeah. So, yeah, we had a pretty strong movement yesterday. And today it seems like we're having another pretty strong move, but to the buy side. Now, I'm very interested in seeing what price does here. If DXY does end up wanting to rally up and get through this, and we, maybe get a strong response below this low, we may be setting up a bearish breaker, right? But again, I need real evidence to try to get into a short. Otherwise, it's just going to continue to march higher, at least for the time being. Where is the... There it is. I was wondering where the hell my open price was. I didn't even notice that it wasn't there the whole time. But yeah, so it doesn't look like there's been much of a interest to do any type of manipulation to set this up as a bullish power 3. I guess you can make the argument that going into 630, if I could find where that's at. I guess you can make the argument that when we opened up here at 630, it declined and set up a bullish power 3 in that regard. But yeah, again, I mean, that just highlights the reason why we don't take trades right at the open, you know, because if we would have shorted in there, obviously it would have, I mean, if you would have taken this and targeted the low, you maybe would have been solid. Probably would have got wicked out though. I think that offered a decent amount. Minimums were offered there, but again, we didn't take this and wouldn't even consider because it would be breaking the rules, and we have rules, you know. And if we don't have rules, we're going to lose, and long term, we're not going to be here. Right? We plan on being here long term with real money. So yeah, unless this low is violated, again, this is a balanced price range. We could see that that's continuing to support price going higher. So nothing has changed, right? Nothing has triggered in the ability for us to want to faithfully tackle a short. Although my intention was to come in and look for a short, it hasn't offered it. So what have I done? We've been gathering intel. All this stuff we've been talking about has been gathering intel. And then, of course, slipped in some psychology stuff and different things like that. But yeah, so we'll see at some point if this wants to give us some type of delivery to the downside. I'm not overly convinced that it's going to be interested in doing that, at least for right now, because this is a very strong retracement. It has broke through levels that I wanted to see get respected. If it was going to push price lower off this retracement, it may still do so. You know, got this wick here, whatever. But again, it may just be looking to trade into this new week opening gap in here. That's a possibility, right? So again, I would have preferred if it would be showing us that it was exceedingly weak and extremely advantageous to take a short if we would have respected the midpoint here like I was talking about, and some of the other these other levels like the down wick here, this fair value gap. If it would have left that available or didn't trade outside of it, same with the Nasdaq, that would have been a lot more convincing. And then, of course, if we got a displacement lower, the target would have been the low here. But I think that them running aggressively down here, obviously it was purposeful to come in and trigger these people in because there's stops down there. They triggered them in aggressively at the start to get people enticed to short. That, you know, I mean, we took shorts yesterday, large shorts yesterday, me and my students. But those that held this long term thinking that this is going to end up continuing to blast through, disregarding the fact that we're pretty much in a consolidation still, they would have got eaten up right here and had little to no chance to get off. They triggered in the stop aggressively. It's a stop run, right? They ran the stops, triggered in the orders, and now they've purged against them very aggressively. Again, the only way that this changes my mindset from higher time frame narrative being bearish to bullish is if we break the high up here. Why? Just to reiterate again, 3 PD arrays on the higher time frame need to be broken in order for me to change my opinion higher time frame wise. Otherwise, anything that goes against the higher time frame narrative is classified as a short-term delivery in nature to set up, in this case, price at a further premium or premium array to set up further shorts. Again, that will change if this stop run ends up, you know, leading to buy side up here being targeted, and you know, in that case, you know, we'll look to, you know, target some of these other upper levels as a result of that. But again, we gathered intel. You know, we're not going to rush. I could have taken an aggressive buy today, right? We did call for a regular trading hours gap to be the contingency plan. It has delivered to that. But again, my mindset is let's see what it does from this level. Fritz said, took 5 handles, 5 handle buys. Beautiful. Perfect. Good job, Fritz. I love the independent thinking. I'm grateful that the same, or like a very similar, you know, somewhat, you know, baseline type of perspective, or baseline objective is being fulfilled very similarly to how my private community gets progress. Of course, you know, they have full access and, you know, constant question ability and private lessons and other students in the community that also apply this stuff, and daily live streams, right? They have a little bit more, but I'm grateful that those of you that do spend time like Fritz has, you're starting to see things come together. You know what I mean? Because it will come together if you keep sticking around, because I know what I'm doing. I promise you I know what I'm doing. And if you sit and watch, you don't have to take my word for it. You know, you just sit and watch. You know, look at some of the reviews people have given me for the last 3 years, because I've been teaching for like 3 years, 3.5 years, right? And it's, you know, it's made me a better mentor, or a better trader in general, to reiterate things in a more simplistic way, try to understand other people's issues and help them improve. It helps me be a better mentor, keeps me accountable as a trader also, and it just reinforces my own understanding. So yeah, because if you can't explain something to somebody, you don't really know it. If you can't explain it to a 3-year-old, 5-year-old, maybe not trading, right? Maybe it's like a 6-year-old, let's just say. You don't really simply know what's going on. You know, it's probably overly complex in your mind if you can't fulfill that. But yeah, I'm glad you took your 5 points, Fritz. Good freaking job. I'm watching the response from here. I highlighted the equal highs up here on the DXY as a possible run, because it's too clean. They don't like to leave that. That may result in us getting this market maker sell model I tried to map out over here. But now we just have a larger range to frame that market maker sell model off of, and the regular trading hours gap here as the smart money reversal. So yeah, this here, nice shift in market structure. New week opening gap is up here. Came right back to the new week opening gap. That's an interesting phenomenon. There's a possible short in there, shift in market structure. Fair value gap, didn't really get into it. These up candles created a bearish order block. Go to the 5-minute, see what's going on here. Scroll up a little bit, see what we could find. And Tyler said gold hit 3,500. Yeah, isn't it good that I told you to invest in that stuff? I told you to invest in gold. Told you. Told you way in advance before it started exploding. And now look. And then of course the market itself looks pretty spectacular because of the turmoil going on. So yeah, I'm going to look to start to identify framing a short. For those of you that care to think about that. So yeah, if DXY does continue this rampage higher and targets that buy side, again, I think this is going to really ramp lower. So now we're breaking through this area here. So from this low to that high should act as a balanced price range. We should be able to see this hold. The midpoint of this is definitely part of my line in the sand. Notice how these levels overlapped here and the fair value gap in here failed to get up into that. Why? Because this created a balanced price range. And this also, breaking this low, changed the state of delivery, at least for now. We may be seeing this turn into something that's going to take us down to these levels. And if it does end up doing that, today is going to be an amazing lesson in why patience and understanding is so important. And my ability to wait in this and trust the fact that, you know, there'll probably end up being a move that takes place. You know, if it does play out, the experience is something that kept me out of the market right now. You know, demanding something that I want to see in price take place. And if it doesn't, I just don't engage, because I'm not going to submit to the market. You know, the market's going to submit to me. Okay, it's going to do what I want, or I'm not putting my money in. And I'm not worried about missing a move, because there's always something to trade every single day. And you have to burn that into your mind. So yeah, let's watch how this behavior is going to be. I'm very interested in seeing what this is going to do here. Yeah, I like this candle here being respected and pushing price lower. Maybe even eventually trying to target over here. We have a regular trading hours gap midpoint down there, which is perfectly in alignment with the liquidity pool down there that I have highlighted. What I don't like is we're outside of the macro. So kind of delivered kind of in through the macro. So we do got the currencies kind of stuck. I don't like the fact that GU left equal highs up there. It's kind of interesting. So yeah, what are we looking for now? So we want to see if price was to displace back through this level, just start really not having any respect. It seems like it's going to respect this area in here, right? But if it starts to really ram through that, obviously shorts are not going to be considered. And if an execution is taken in here and it results in a loss for a short, right? If say you didn't take any opportunities, if you took a buy and executed and succeeded, you get out of the market. If you took a short in any capacity, wherever your idea was that aligned with your model, if you took down entries that made money, whether demo or real money, you need to sideline. Okay, there's no need to push. Prices definitely back and forth. Right, this is obviously a very strong move, but we're inside of a range here. Okay, so one opportunity should be taken, not multiple. So yeah, let's watch how this behaves. This is going to be a very strong deciding factor in here, whether price is going to want to seek sell side or not. Consecutive up candles, balanced price range in there. Regular trading hours gap, 50% level. This was my level to target. Price is going to go higher, but it's also the level that I want to see price respond away from if I'm going to frame a short. So let's see if it can support this and reject away. We don't want it to go too deep into there. We got relative equal highs on the DXY. This shorting is off the basis that this is probably going to seek these equal highs up here. Right, so we'll see if it wants to accept us with that. The Dow's not. The S&P is still rampaging too. So this is a little too deep for my liking. So line in the sand is right here. Okay, let's see. Overlapping fair value gap. If it gets above that, it's going to turn to an inversion and push price higher. Yeah, so that right there. Let's watch how this behaves here. Let's see how this holds. Rejection into that would end up sending price higher. See, now we got another overlapping candles, right? Here, here. So if we stay above this inversion for value gap, again, it's building more reason why price is still not done running higher. And again, it didn't hit the new week opening gap in here. Notice how we're running right to the weekly open. We're inside of a bearish market still, okay? So we want to gather this intel to see what it's going to do here. Okay, we don't want to force anything. Okay, DXY, I want to see it run these highs up here, but if you look at it, it's been very back and forth. Okay, one side, pretty much seek and destroy. The Nasdaq hasn't been that way though. Obviously, it's been aggressive to try to blow out this previous high up here, which is London's high. But again, because the narrative is bearish, my eyes and attention goes to this possibly running higher to set up further short positions, right? So this run higher doesn't get me discouraged to take a short, but I need more evidence to take the short. Otherwise, I have no problem in not taking a trade. And why am I repeating this topic over and over? Because you need to get comfortable. If it doesn't show you something you want, right? But you're feeling antsy to get in, You have to keep these things in mind, because I guarantee you there's a ton of people that tried to force a short today, and today, yesterday was profitable. But seeing this drop probably had everybody pushing the shorts aggressively. That's why the behavior is so aggressive right now to the buy side, reaching for whatever it's reaching for. In this case, it was possibly new week opening gap, which I do think has a chance to get hit really soon. And then also the regular trading hours gap from yesterday that completely was left open. But what do we have now? We have the regular trading hours gap down here that's available too, right? So if it responds up here and gets back in line with favoring shorts, which is not happening currently, we need displacement and things to set up again for us to favor shorts. But if it does end up getting down there, I see this as a market maker sell model. And I honestly see this consolidation, accumulation, reaccumulation, possible smart money reversal from the new week opening gap to then send price lower on a more large time frame basis, maybe a 15-minute basis, right? That thinking changes if price gets above this new week opening gap, because then we start to really contest the level that invalidates for me the narrative being bearish, right? So today has been a lot of waiting given the fact that this has been aggressive here. And yeah, still inside that range, things are still just kind of coming off that fast movement off the open. When price does that, again, another perspective you want to have is you want to be very cautious. Yesterday, me and my private community executed massive shorts. Okay, went hundreds of points again, aiming for the previous day's low. Okay, or previous week's low, or one of the liquidity pulls from 2 weeks ago, and then it hit that, right? So now we're in a scenario where we're going to have to continue to monitor these levels I've mentioned. Okay, slow and steady, still fighting back out of drawdown. Yeah, slow and steady, bro. Don't even think about it as a negative vibe. Think about it as something that drawdown is a blessing, because then you really get to put yourself to the test. Just because you're in drawdown, the best of the best go into drawdown. It's unavoidable. We'll make mistakes. Sometimes everything will look correct and it'll still go wrong. Getting out of drawdown is the best thing you can do because you want to practice that skill set. That's an element to your skill set as well, aside from just taking down profits. You're going to be just like how businesses have losses sometimes. Do they look at their losses as the end of the world? Oh, the inventory got burned down today, or someone stole the packages today, or whatever the case may be. Maybe something happened, the plumbing broke. That's a loss to the business. Do they look at that as the end of the world? Well, when we take a loss in trading, why is it any different? We just got to think about adjusting, figuring out how to fix the loss. And we have to practice that because it's a skill set, in both normal businesses and in this business as well. So be grateful for your drawdown and, press into it. Because the more times you can get out of drawdown, the better you get at it. And then once you become profitable and you get to a point where you're trying to get to, you now have a reliable skill set to get yourself out of drawdown. And then hopefully by that time, you also know what'll keep you from getting into drawdown, right? So yeah, very important perspective to have when it comes to drawdown. So yeah, I'm watching this low here. This is a 5-minute. So let's see if this low can turn into a possible shift in market structure. The fact that we didn't even punch into the new week opening gap is kind of concerning. None of them have hit it. Again, we're still watching this wick here. Remember, these levels are still present. If we were just on that lower time frame, we would be disregarding all these levels. In many cases, most people would. They'd be thinking they just need to buy right now because it's running higher. But we're looking at this thinking, okay, let's watch. Is it going to displace from these higher time frame levels? Or is our invalidation levels going to support us taking a reliable short position? Let price come to you. right? This is the essence of that. Letting price come to us, watching what it's respecting and what it's not respecting, and then being able to translate that story to, understand what it's saying. And again, if we don't take a trade, we don't take a trade. Okay? We'll be back tomorrow and the next day here on YouTube. Of course, we have to wait another week or whatever. But I'm still in the Discord, still sending out some stuff. But of course, my private community, they've invested in me, so I'm obligated to make sure they are taken care of and catered to. So. But yeah, I'm grateful to hear people like Fritz, though. Slowly but surely, the pieces are falling in line. Because I give so much that's available just on YouTube. Similar to what ICT did back then. He'd give enough to be profitable, but I don't make things complicated regardless. I try to make them easy as possible. Fritz said, gotta go. Thank you for another. Yeah, for sure. Learning how to navigate multiple time frames, bias, and narrative. Yep. Beautiful. But yeah, I'm curious. Did any of you guys take a buy aside from Fritz? Tyler, did you take a buy? Any of you guys, did you engage at all, or have you been sitting on the sidelines, kind of emulating the vibe we've been working within, which is kind of just waiting? We have a macro coming up in 20 minutes. So we'll see if there's something that can deliver there. I wouldn't be surprised if that macro sets us up with the decline. Yeah, me too. I'm sticking to shorts too. I wouldn't be surprised if the macro comes into play, delivers this as something to entice traders to buy now, thinking they're going to pick a bottom. And little do they know, price is just still in a downtrend. Right, so yeah, let's look at the lower time frame. We're getting that slight push now. So watching this low. Failure swing. Higher high, so we got SMT now at a higher time frame PD array. Okay. Fair value gap in here. Bearish order block in here. Large wick. So if there's a displacement through this low with the fair value gap that's left, we may be seeing this set us up for what we've been anticipating and being patient for all morning. So yeah, timing is everything, guys. We're going to wait for possible time. This is, you can make the argument that this was still possibly, if it does continue to drop off this delivery, we're in time distortion for now until we get displacement. But this could end up proving to have been a YouTube model entry. Just the fair value gap in a higher premium was the one that was used. Yeah, I'm not going to assume that just yet. I'm being very demanding, as you should be. Got this order block here. It's going to be interesting to watch. I may look to pyramid. If we break this low, I'll probably toss in a small entry. And then if we can continue to support price getting down to the lows down here, I'll just continue to pyramid my way down to the lows. If, of course, the scenarios work out. Yeah, we'll see right now. Let's watch what happens here. Order block. There's order block in here too, so that's a good thing to note. So let's watch how this behaves. So again, displacement through this low here, from this order block within the context of DXY potentially running higher. It just makes sense to try to find shorts, especially if we violate this. It's in my opinion, this is a picture perfect market maker sell model. And then again, if it was to decline down here and fail to do that and start to displace higher, my attention is really getting ramped up to try to aim for the rest of the new week opening gap, if that was what was going to take place. We do got this order block that's bearish, but then we also have this as a bullish order block. DXY is now looking like it's failing to try to get those highs. I think this would have had a lot smoother of a sell-off if we would have had DXY get up into here. But now it's kind of just like, kind of losing steam real quick. We have to still remember that DXY is still in a downtrend. Still got that cracking correlation overall. I mean, I guess the correlation is somewhat getting a little better. Everything is still cracked though. Okay. So, again, that's why the risk is lower. That's why it's cut in half. Or at least a quarter taken off, which is what I'm doing. So yeah, we're going to watch this order block here. Seems like it's really uninterested for now. The shorts are not interesting to me until we get another displacement. Especially with DXY doing this. And the fact that there's this SMT there, that supports the short. But one thing that does concern me, has been concerning me, is the fact that it left this so precisely. It didn't reach into the new week opening gap. So it could want to get up there. And then, of course, like I mentioned, we have the regular trading hours gap midpoint. It's dancing around. So I'm starting to get a little more and more convinced about this being a market maker buy model. I mean, just look at how structurally it looks. It looks pretty nice. But again, I'm not going to, because the higher time frame narrative is still bearish, I will have to see us at least get above this new week opening gap. Then I will be looking to favor possibly seeking buy positions. Otherwise, I'm going to just continue to want to see shorts take place. And let me tell you this too. If this fails, say it trades up into here and displaces and really fails to even try to attempt to get back up into these levels, that is wonderful. Because then that'll start to really ramp up our interest to target these lows and then this one as well for the week. Right? So yeah, at least for right now, shorts are off the table. You know, they're resting right there like an inch from the table. But if things don't transpire, and price doesn't, in this case, displace and whatnot, it's probably not going to short. It'll still continue to run and maybe trade up into the new week opening gap. Because it left it, I think there's a pretty strong probability indication that it's going to probably want to reach up there at least. Right, so yeah. And if a couple of them, like maybe, 2 of the indices trade into their new week opening gap, but one doesn't, that's a type of SMT. Right, again, we also have these higher time frame levels, the wick, midpoint, and then all these levels I mentioned to continuously use to support us for reasons to short. And we will only change our opinion overall if this gets violated. Multiple PD arrays need to get violated. Okay? And it's kind of just been a mess. But we've done fairly well the last couple weeks, even through the mess. So, trading both sides. So, yeah, let's see. DXY definitely ran to where I wanted it to go, both to the downside and to the buy side. But now the question is, what type of decision is it going to make here? Is it going to favor shorts? And are we going to... I can tell you one thing. If DXY continues to tank and we get those higher time frame levels violated on the indices that change the state of delivery from bearish to bullish, we may start to see symmetrical markets finally kicking back in line, which is a good sign. because then more high probability, easier conditions will take place, assuming that things hopefully chill out in the economy. But yeah, it wouldn't even be a problem if today does end up being the bullish day within that weekly candle. Sometimes that takes place. And if we're in here trying to force shorts, but we get caught up in something like that, we may have the narrative correct, but if we don't have patience, if we don't stop ourselves from overtrading, if we're not being demanding in times like this, if we just try to force a short, we may get caught in the other side taking place in the form of a retracement. So price has now whipped through. DXY has given a strong decline. It failed to break that high. So again, the shorts have not had a chance to really present themselves, unless maybe you took one of these up here, like I mentioned, this very deep retracement, creating that small short. Technically, the YouTube model rules took place in there, or maybe you use this and use that as a shift in the reaction off of the 50% of the regular trading hours gap from yesterday. And maybe you ended up taking this, trusting this as a balanced price range. See, so the balanced price range logic that I've been giving you guys, I know some of you guys have mentioned in DMs that you've noticed this, but the balanced price range logic is a model in itself. I mean, again, the breakers and order blocks, they are balanced price ranges. They're just talked about differently. Something like this is also a model, overlapping fair value gap from a higher time frame PD array or form of liquidity, and then a shift failing to try to get back into that. Well, I mean, technically this is a order block, right? As you can see here. So, I mean, just it depends on how you look at it. But again, this is a model in itself to frame something around. What makes you set up or consider? This is an amazing question. I think Mark has been asking some of the most awesome questions today. Same with, I think Fritz too. Yeah, I asked a couple of good ones just earlier too. You guys are amazing. What makes me consider a market maker model setup? Mark, let me ask you this. Have you watched my market maker model video that I have on YouTube? Let me know real quick. Not yet. So the question there, what makes me consider, I actually do answer that in the market maker model video that I've shared. And I go into great detail about lots of different things related to scenarios and whatnot. But anytime price is going lower to go higher or higher to go lower, I'm thinking about market maker buy and sell model, plain and simple. Whether it's a continuation, like a retracement to continue, or a run higher to retrace, I'm looking at the market maker buy model and sell model frameworks at all times on every time frame. It's just the higher time frame obviously can be used as framework, and then the lower time frames can also be used as entries and framework. Okay. So simply to answer your question, that is essentially when I look to consider and what makes me consider. Literally, it's if price is going to go lower to go higher, as we saw this week, or if it's going to go higher to go lower, that phenomenon, if you can identify that without any other logic or any other consideration, it's always in a market maker buy or sell model. ICT have said at every moment in the marketplace on every time frame, we're inside one or the other. And both of them operate within each other. Like there may be a 1 hour market maker buy model, but as price is dropping lower to set up the sell side of the market maker buy model on that 1 hour, if you go to the 1 minute, as price is creating that sell side, it's creating mini market maker sell models in each of the phases on the sell side And then on the buy side, it'll create multiple different like mini market maker buy models to deliver that buy side of the market maker buy model on that 1 hour for this example. Does that make sense? Again, that's something that I go deep into with market maker models. I've been looking and I only saw Power 3 Bootcamp. Yeah, you should be able to see the market maker. It's not a series, it's just a video. It's one video for the market maker models. Because, I didn't really need a series. I probably should make a series for market maker model understanding. I have a big explanation of that in my private community. I think it's like a 4-part series. But yeah, that one video on YouTube answers when will we know that the market maker model is now at play. That's also answered in the video, and what makes me consider. And the answer is kind of the same for both of those. Again, ICT has said that we are always in a market maker buy and sell model. If price is going lower to go higher on any time frame, no matter what perspective you have, you need to think market maker buy or sell model. If it's going lower to go higher, think market maker buy model, depending on what time frame you're looking at, right? And the higher time frame is going to be king. It's very easy to get lost in the weeds with how fractal market maker buy and sell models are, because you'll go to the 1 hour and see a market maker buy model that looks clean, but then you can also go to the 1 minute and you'll see market maker sell model, market maker buy model, market maker sell model, back and forth over and over as price delivers. And then you'll see if price is going higher, market maker sell models will fail, right? Because price is going higher, going lower, leaving lows, and then just going higher again. So, what I just mentioned here and some of the things I've been talking about, if you watch that video that I put on YouTube, it will make a lot of sense. And there's a lot of visuals too. I think I have market maker buy and sell model conversations and content also inside my free Discord. And then again, I talk about this type of stuff ad nauseum regularly in my private community too, if you wanted more of like a hands-on view outside of what's provided. But yeah, definitely look at the market maker video I have on YouTube. You just search up WMG trading market maker model and it should pop up. It's one of the first things. But yeah, notice how I mapped out this breaker. I didn't really say much about it, but if you were paying attention and you wanted to consider taking an execution, I just laid it out for you. I didn't mention it, but I highlighted it right in front of you. All right. So because shorts have failed, they haven't turned on, this would have been my buy. I just had to talk about some important stuff. Getting you guys to learn is more important than me trying to push an entry. But yeah, I highlighted this, so hopefully some of you guys caught the memo there. But yeah, especially with DXY declining so aggressively. DXY is definitely dancing in between its regular trading hours gap pretty well. We got the yields giving this retracement here. I'm not sure. What is that new week opening gap I have highlighted there? Let me fix that, because that's not right. So yeah, I appreciate the questions, Mark. Because yeah, those are very, very, very important questions. And everybody that asked questions today, you guys have asked amazing questions today. Very important questions from, how often does an order block or any other PD array get revisited, to what else? Overlapping models, to what is it? Fractal balanced price ranges, the delivery on lower time frame, how that relates to the higher time frame, and what's happening within that, and what should you focus on, and then of course market maker buy and sell model conversations. So we got the currency still raging higher, and of course that also is followed by the indices running higher. And now, I haven't called anything out all day, but I just gave this out without, of course I didn't mention anything else in the busy talking, but this offered the minimums there. It's probably the cleanest move I've pointed out all morning, was that one right there. And then of course we're going to watch this and see, if it violates this low down here, and DXY can give a retracement or a impulse back above to try to come and finally blow this stinking high out. That would then possibly kick us back in line. Notice how we've also came intentionally all the way back into this regular trading, or this new week opening gap. We have the regular trading hours gap down here. We're in a bearish narrative still haven't changed my opinion yet. But of course, there's been moments in time where we could pull buy side opportunities. One was right there. All right, so we'll see how. This is also I think on the 5 minute, it's also a bullish order block. Right there. See how high this time frame goes. There we go. Actually, instead of putting the order block there, let's actually do this. So yeah, we need to see what the behavior is going to be here. DXY could very easily just be retracing into that bullish breaker I highlighted earlier too. So again, I want to see what's going to happen here. If it displaces through this, price is going to definitely continue going lower. Higher time frame wise, that's what should take place. But watching this here, we're going to see if it has more interest to want to retrace higher. That would promote timing wise for the indices to want to maybe take a nosedive. And this order block midpoint here is important. We hit the new week opening gap, and now we're getting some very strong volatility in here. I like that response. We got that over here as well. So yeah, we'll see if this translates to shift in market structure, run on stops, still respecting the higher time frame levels we've been talking about. So yeah, let's see what happens in here. So this here becomes a bearish breaker inside of a liquidity pool. Inside of the bearish narrative, DXY is now expanding pretty aggressively. So yeah, this is very much got my attention. So let's see what happens here. I'm going to elect to be conservative here. So let's see if it can give a delivery back below this low. If not, I'm not interested in pushing this at the highs up here. I would need for us to break this low. Then I'll use this as a bearish order block with this behind us, potentially. All of that is a response off of the new week opening gap, potentially. But we'll see what happens in here. If not, it'll obviously look to want to run probably to the midpoint of this new week opening gap. But if it can't offer a short in here, it's kind of really testing it right now. It's breaking through this, so I'm not overly confident in the short. But yeah, if it does invalidate this, it jumps off this bullish order block I highlighted, then I'm more or less not really even interested in trying to take any engagements. If this does take place, though, my eyes go to the mid portion of this new week opening gap. Only way I would look to even frame a short out or consider it is if we can violate this low, because then that violates the order block, that violates the swing low, and then and yeah, it would get us down into this level and be able to use that as a rejection to target these equal lows. The framework in here, the idea I want to see is, price looking to displace through here to try to come and take these lows out. But again, we'll see. I'm not putting too much demand on that. That's what I'd like to see. If it doesn't show up, so be it. I don't want to take a buy right now. DXY, the relationships are too sporadic. And, we've gotten some very valuable intel today given where price is delivered to. So, if this continues into tomorrow and it just continues to rampage, then again, our interest to short shrinks. And then if our areas of interest on that daily chart, which are still intact, mind you, if these start to get violated, right, if we get outside of this new week opening gap, we're going to have an opinion that may look to seek some of these previous days' highs up here from last week. Right? Otherwise, hopefully we could see this at some point in either this session or next session, going into tomorrow or maybe even overnight, start to push us down back in line with the narrative that's still intact for now, which is bearish. So yeah, let's see what happens here with the fair value gaps in here. Overlapping. So let's see if this, how this fair value gap behaves. And this down here, if you didn't catch this earlier, this is a bullish order block, right? So this delivery off this bullish order block is not convincing that we're going to short. That's why I'm saying I'd much rather prefer to see us displace below this, so I could use this as a bearish order block, and then try to catch it going lower in that case. Otherwise, if that doesn't happen, buys are going to continue. So what is that telling you? You don't look for shorts right now. If you want to look for a buy, it's something that can be considered. Say financial advice. I'm not a financial advisor. And, you make your own decisions. But that's my opinion. Right? Only way I will kick myself back in line with shorts is if we violate the low down here. I'd much rather prefer to see this high left too. Doesn't look like it's going to do that. Seems like it's going to smack that high. If that's the case too, then this becomes a bullish breaker too. These up candles right here, this becomes a bullish breaker, bullish order block. So breaker was there, held up. Breaker is here. Seems like it's going to hold up. And again, we got the middle portion of this new week opening gap. So keep your eyes there. So yeah, amazing in here. This is another example of the balanced price range. Price swept the lows, hit a 15-minute order block, overlapped this, shifted market structure, came back to a fair value gap, left a portion of this open, never broke this low, which again was the trigger for me to think short instead of buy. And now we got above this, so now we have a breaker up here too, so it shouldn't come through this. So the buys I've just given in the last couple minutes or whatever. This one played out, price getting up into here, right? Me mentioning only way I short or think about it is if it breaks this low. I mentioned the mid portion of this, right? I personally didn't engage, right? Because I've already made my decision already, you know. But this whole engagement in here proved to be reliable. And then depending on your view, your own personal perspective this morning, you either emulated what I've been doing and just sat on my hands, or if you were thinking outside of what I've been mentioning and favored more buys than anything else, you had multiple opportunities to participate. Right, we had this fair value gap here, overlapped it there, didn't even come back to the midpoint, run on stops, shift in market structure. This is another breaker in here. Balanced price range. This is the breaker I mentioned a second ago. Look at what it's doing. Again, we have, for me, all the way up to the new week opening gap midpoint here. We're also hitting the quadrants. Yeah, so hope you guys have learned a good amount today. It's been a lot of intel gathering as we have been doing this stuff. So I appreciate those of you that have stuck with me, even though I haven't been dumping a lot of entries onto you. When I come into the market and I'm looking for something to take place and it just refuses to take place, I'm not in a rush to try to get in and push for the other side until it proves that it wants to go that other way. I mean, there's multiple times in here that I could have made that assumption. It's especially with the characteristic that I mentioned about price when it accelerates aggressively off of the open of a new week and it just races to a level and then starts to immediately run above it, like really, really aggressively like it did here. I mean, that's a really telling sign that, everyone's getting triggered into short in that case. Same if it was to buy. They'd be trying to buy. Right? In this case, it was very fast to downside. We're in a downtrend. It triggered in everybody to want to short. So it's not unreasonable that they went into this, right? Rammed up higher and have targeted the new week opening gap. We got above this 8-hour fair value gap. I did mention that if we get above that, it'll probably continue to push higher until it gets up into the regular trading hours gap, 50% from yesterday. I wanted to see what it did there. I said if it violates that, then we'll probably reach the new week opening gap. It reached into the new week opening gap, did not really respond away from it. So now the next step is the mid portion of the new week opening gap. These are all levels and plans that we're watching as price looks to want to possibly invalidate the interest for us to short. But I do not change my overall perspective quickly. It's like turning a Navy ship when it comes to me changing my narrative. You want to be slow when it comes to making those decisions, but fast when it comes to protecting your money. Okay, it's very important. And you also kind of want to be slow. Actually, I think ICT has mentioned before too. You want to be slow taking your money off. You want to be able to sit in the entries and let it mature. But then you want to be quick if it runs against you and starts just not delivering at all and starts showing you these red flags. You want to be quick to pull the plug. It doesn't mean you get in for 5 seconds and then just get out because you're scared. That's not at all what I'm referring to. But if you have invalidation, validation principles like we talk about continuously, and you trust your risk model, as in, you're not going to blow your account because you're not going to over leverage or over trade, you have nothing to fear. So when you're in a runner, learn to hold it a little longer. Hold it for 20, 30 points at first, then go from 30 to 40. Live there for a little bit, then try to, frame things from the higher time frame, execute on the lower time frame, and look for 40 to 50, 50 to 100. And you gradually grow your way to larger objectives. But notice the 8-hour midpoint of the fair value gap, 8-hour fair value gap. Notice the initial fair value gap we pointed out, right? We were watching that, and that was used. That was used to launch price in this exaggerated buy side delivery. DXY has also kind of declined away. So it seems as though things are somewhat kicking into correlation. Bonds and yields are still kind of hectic. Okay. So again, when things are cracked in correlation, you gotta be cautious. That's why we've been very cautious. But you guys have seen, especially my private community students, we have called so many entries the last couple of weeks, back and forth, back and forth. Didn't take all the entries, right? Obviously, we only take 1 to 2, but the amount of opportunities that are present, even with us being patient. Today's the first day that I've sat here and was like extra patient, because it's doing things that may end up turning the narrative. You know, we're in a moment where things may look to transition, you know, from one exaggerated downside panic to, you know, us stabilizing. Because you're seeing some headlines in the news also talking about how the markets are somewhat stabilizing. It's very interesting how things may, or they're showing signs that they may start to kick back in alignment with correlation. You know, it's very interesting. It was kind of lagged, or the news came a little bit late to you know, what's been somewhat happening in the marketplace. But yeah, we're starting to see some good headlines. Not that that's a be-all, end-all, but it does give a good sentiment reading. And then obviously going and listening to what everybody's opinion is. Everybody's opinion is too short, even mine. So again, if it looks like it wants to transition that, which is what we've been observing today and yesterday, then obviously we have to be very observant and allow price to speak. Don't be, you know, too aggressive, right? And we'll use this intel, say we get above this new week opening gap. You know, we may be able to logically target buy side then. And it may look to complete the market maker buy model I mentioned we could be trading within. That's what it looks like to me. All right, looks like this could be consolidation, accumulation, reaccumulation. Once we get up above this new week opening gap, if it flies on through it, we'll have that second stage distribution up here, and that'll be where I look to position myself for a buy. But yeah, so the opportunities that I've given this morning was only 2 that I really pointed to. I pointed to one, didn't really speak on it because I was explaining something. That was this bullish breaker. Beautiful. I talked about this balanced price range down here. I said if it's going to go higher, it's going to stay above that. If it's going to short, it would have to break this low. Never did that, stayed above it. So what does that mean? Buys are only of interest. Price got to this regular trading hours gap from yesterday. What did I say? It has to respond away. I'm watching this low because I'm going to be conservative and let it really deliver through that to prove that it wants to go lower. Otherwise, buys are going to continue. What happened? It came down there, set equal lows, failed to break it, displaced higher again, creating another bullish breaker, or created the one breaker but used it again. It's also a 15-minute bullish order block. I pointed that out as well to watch. If it holds that and displays higher, it should create further buys. From that breaker and order block, I also pointed this out, right? And then, of course, once we got above this high here, I've just labeled, like within the last 20 minutes, this as a bullish breaker as well, using that to target the midpoint of the new week opening gap. All right. Did I execute these ideas? No. Not every idea that you look and study and dissect should be executed. You know, I don't want to worry about stuff that I don't have to worry about right now, knowing that I'm more or less concerned with what price is going to do overall, what this week is going to like impact. Things have been extremely bearish for the month, so we're approaching the end of the month. So it's not unreasonable also from a power 3 perspective that they're going to want to push to the buy side. Okay, so all that stuff considered, if we think about that, in hindsight, seeing what price has done, it kind of promotes the fact that buys were, you know, a lot more probable than I gave them credit for today. Right? So, you know, none of us are perfect. But our ability to identify what price is saying in the moment, what triggers in an interest for one thing or another. In this case, I was looking for things to trigger in shorts. Those things never got triggered in. So what happened? Price was continuing to go higher. I made the regular trading hours gap from yesterday a possible priority if shorts failed. Price beautifully delivered up to there. The second level was the new week opening gap. So we walked all the way through that while mentioning also, because I was favoring shorts, I wanted to see us go higher to go lower. We also talked about, what would set us up with the short, but then also highlighted nonchalantly, on purpose, where buys would be, right? Like I was talking about something, but I labeled this, mentioned it as a breaker. So, yeah. I don't like to get people in trades. I don't like to do that, even though the accuracy that I have is really good. I know that some people get out of line and they'll over leverage and over trade because they see that I hit the way that I do. So it's kind of nerve wracking because, people aren't perfect and I know that people are irresponsible. So, I'm very cautious with what I do when it comes to that type of stuff. But yeah. But that's why when you join the free community, I'm a little bit more lax because you agree to a terms of service. I'm not responsible for wins or losses or your success. It's the same with YouTube. That's why I put a disclaimer. But, even with that, I don't feel comfortable knowing that someone may not follow the rules and get hurt as a result of, executing something that I may have profited on. But because I didn't hold it longer than the student may have, they may end up getting hurt. And it's something that definitely keeps me up at night at times. I understand why ICT thinks this way too, because it's like, I'm trying to do a positive thing, but we're in a battlefield, okay? And if you don't follow things, if you're following someone's trades, if you don't follow them exactly and know their thinking, which is, it's part of why I explain so much stuff. But if you don't know their thinking, if you're not listening and you don't want to follow the rules or be disciplined and do what's being talked about, there's real risk in these markets. And I know a lot of people come from humble beginnings. So, that's in part why I don't shove my profits down your throat, okay? Because I really could. I used to. Like when I first started teaching and coming on YouTube, you can go back and look at some of my videos. I was shoving it in people's face. But it attracted the wrong type of people. I'd rather have 3 people listening every single day that are dedicated, ready to change their lives, that will, do what's necessary, versus having 20,000 people that don't pay attention, don't listen. They just want you to give a signal because they're addicted to pushing the button. That's just my preference, but, to each his own. So, yeah. So I think that about exhausts my interest these last couple moments. Inside this macro here, delivered a breaker, pretty beautiful breaker delivery. 2 levels of breaker / order block delivery. 15-minute order block here with a breaker. Then obviously once we got above that, we created this as a bullish breaker too. Price ended up using that as a breaker too. Notice how this fair value gap was left. You may be asking why. Why was that left? Well, keep in mind what I've been talking about today and over the last couple of years. Why price leaves fair value gaps available? They're balanced price ranges. If there's a wick that overlaps the fair value gap, or if there's a breaker mixed with the fair value gap, or if there's 2 overlapping fair value gaps that deliver away from each other, that creates a balanced price range. And if there's a fair value gap there like this, it'll leave it available. Okay? So yeah, Tony, I appreciate you saying that. Tony said, I appreciate your time and your education. It's priceless and life-changing. I'm grateful that you think that way. Again, people like you are the ones that I'm focused on. I'm not focused on those that want signals every 5 minutes. I'm trying to turn you into the signal provider. I don't want you to be codependent. I want you to show up here to learn, and then eventually once you get to where you're trying to go, show up here to hang out. That's all I'm aimed at. That's all I'm aiming at, because trading does more than enough for me. It really does. But it's hard to get the people that are serious, because I have a community of people, like especially my private community, that I really care about. And I want the best of the best people, from the best of the best new students or the best of the best people that feel they can add value to the community, to be a part of it. And if we just have a bunch of signal junkies and nonsense, it's just, it messes up the vibe. It's too much to deal with. I got to keep, telling people, like telling them to stop doing this or stop doing that. And it's just like, and then they complain, and, they just don't have the right mindset. It's just, so I'm very, very particular. And that's why I have things structured the way that I do. That's why I teach the way I do. I have a goal. I have a specific target. Okay, I want the times people spend with me to be profitable. I want them to actually do something that they can help their family learn. Like my little brother, right? He trades. I'm Reckless on YouTube. Because I learned this skill set, I'm able to pass it on to him. I'm able to guide him. And now he's trading and showing some massive leaps in his understanding. And he's 11 years younger than me. I'm 30, right? So he's younger, So it's amazing. He's 11 years ahead of me, right? Or like what? Almost 6 years ahead of me when it comes to learning this stuff. So I'm trying to pass that blessing on to you guys, so you guys can do the same. And then just be here for elevation and hang out and be around people that actually love this industry, that know what they're doing, that can also help you be better. And then hopefully as a result, you can also make the community better as well by being an asset to the community yourself. Right? So, yeah. Again, I want to say this pretty much exhausts my AM session. So, with that being said, I hope you guys learned a lot today. It was a very discipline focused morning for me. 30. I appreciate you saying that, bro. Dang, I appreciate that. I try to take care of myself, But I appreciate you saying that, Mark. But I'm 30. About to be 31 in July. So time flies, man. Time really flies. And you're going to look back and be glad and appreciative of what you did with your decisions, or you're going to look back and regret things you didn't do. So, live your lives to the fullest. And if you want to be a trader, go full force, because this is a lifelong thing. And if you're going to be here 50 years from now, I'm going to trade till I'm 80 years old, till I can't see anymore. Why not? It's fun. It's not demanding. It's, get to smack people around in a financial market. It's pretty amazing. So why stop? But if that's your goal, pour into it as much as you can. Be patient. Takes time. Keep showing up to things like this, getting around people like you see here. Reach out to some of the people that are asking questions. Lock in with people that appreciate this industry and have a passion for it like you do. It makes it even more enjoyable. And most people don't get what we do. They don't understand us. They really don't get it. And you can't explain it to them because they don't know. They don't know what they don't know. And, so sometimes you're going to have to not mention it to people you care about, friends and stuff. But again, that's why things like this become an asset, and I'm glad to be able to provide that in some way. So what's my skincare routine? I don't really have a skin. How about this? It's jeans. Okay. There's some jeans, right? A lot of my family looks young when they're older. My mom looks young. She's, 55. She looks pretty young herself. My dad's a wreck. He don't take care of himself, but it is what it is. But yeah, you got to get this. I have something I could share with you in DM if you want. I do have some stuff. But yeah, Mark, DM me on Instagram if you want me to send you something I have. It's actually awesome. It's like cooling too. It's like a nice little lotion thing. But yeah, guys, before I get off topic into some stuff unrelated to trading, I guess we'll call it a day. And for those of you here on YouTube, definitely, again, don't forget to like the video, subscribe, share with your friends if you think they could provide value or can get value from the content here. Or just want to come hang out with people that know what they're doing, and some that are aspiring and on their way to knowing what they're doing. Right? But again, I appreciate your guys' support. I appreciate you guys showing up and sticking with me this long. For those of you that have stuck with me this long, I appreciate it. And don't be reckless. Okay, watch the market if you do have time. See where things end up. Again, if we get outside of the higher time frame levels up here, this is my line in the sand for shorts. Of course, if we get above the new week opening gap, that is a pretty strong indication that that'll probably be targeted potentially. And of course, depending on how we trade around that, will indicate whether it's going to really ram higher, try to take this, or if it's going to be a brick wall that ends up eventually sending price back to the downside. For now, we're going to assume that, price could reject from here, but we're going to keep our eyes on these levels of invalidation, these PD arrays that are above us that we've talked about this morning. And then, whatever we have to manage tomorrow, we'll make a decision based on, in the free Discord, I'll send out some markups. But for my private community, we will be live, as always, at 5:20 and anticipate this wild delivery for PMI. All right. So yeah, that's probably also another reason why price has been a little sporadic the last couple of days. For one, yesterday was a day after a holiday, so that's low probability. And then of course we have PMI, FOMC type of event. So that could also be why price may get stuck, right? It may bounce back and forth. It's probably the reason DXY is now in a range-bound environment ahead of that news event. Right, so remember, when higher time frame delivery is going to take place, a lot of times it's going to need institutional sponsorship to deliver that. Like say we're delivering to a bearish breaker from the daily chart. Okay, well, we need a news event to give enough interest to get up there. Then once it hits it, another news event may be needed to then push price away from that. So the economic calendar acts as a macro tool to be able to time large ranges or delivery to specific PD arrays or away from specific PD arrays. All right. So yeah, I mentioned that before, but I just thought I'd mention it again, right, before we leave. So again, God bless you guys. Thank you for hopping on. Appreciate the support. Don't forget to like the video, subscribe, share with your friends. And with that being said, be safe, and I will see y'all next time. Tomorrow in the Discord, the free Discord, I'll be sending out markups. But in my private community, I will see you guys live, as always, at 5:20 tomorrow morning. All right? Take care, you guys.